Good morning, everyone. Thanks for joining InvestorExpos. Today is August 6th. My name is Anna and I'll be your host. We are having a great lineup of 4 speakers for you. Matthew Buckley, Jeff Tompkins, Kate Harwood, and David Smith.
Okay, thanks, Anna. All right, folks, let's go ahead and get airborne real quick. Before I get airborne, because my presentation today, I wanted to talk about just trading one stock. What? That makes no sense. It makes perfect sense. I can't. I'll get into that in a couple minutes, but this is huge. At 11:30 Eastern, so in 29 minutes. So I'm going to have to. I'm going to move quick. I'll go the extra 15 minutes, but this is a major announcement that you have to pay attention to. Why? Look at the S&P 500, what it just did, and look at what I just did in a live trade brief a couple minutes ago. I bought some puts on the S&P 500. Listen to me, folks. For the past year, 2 years, this is the New York Attorney General. This woman is the Attorney General, the head law enforcement officer of the state of New York. She's been quiet. Well, she was quiet ever since she ran for this position, and her motto was, "I will bring down Trump." Last night, her office sent out a press release that said, "We will have a major announcement tomorrow at 11:30 Eastern." Ladies and gentlemen, this was after Deutsche Bank, Trump's bank, was subpoenaed and finally turned over records. Folks, this is not good, well, for the president, but it is potentially very, very bad for the market. Now, I just got out of a live trade brief, and one of my buddies sent me a text. He's like, "It already leaked. It's going to be ugly." So look at this. The market opened. We had a nice rally. Everything's great. Bam! Look, I haven't seen it sell off that violent in the S&P 500 in a long time. We got a little bit of a dead cat bounce right here at 3,200, and just get ready. If you do not have some protection on for this market potentially imploding, or you're not long some VIX falls with, look at the VIX. The VIX exploded about 20 minutes ago. Get your popcorn ready, folks, at 11:30 Eastern. Again, I'll do my full presentation here, but I got 2 screens up because I am ready for potential market implosion here, folks. So this is, I'm going to teach you how to do this type of stuff, but you have to have your radar out, looking at all potential threats, man. And you know, U.S. attorneys or states attorneys general don't. They don't tell you that they're having a press conference like 30 days from now. Like, okay, in a month, we're going to talk about this. They say, they do what she did last night. We'll have a press conference tomorrow morning, 11:30. Whoa. So real quick, all right, let's get airborne in the presentation I wanted to give. But again, if I'm seeing a potential trade, and I already sent this out via text and email to all of my members, and they're ready. We got an ejection seat in case this market decides to implode based on, you know, I don't want to speculate, but I will use the I word. Let me go back to this headline real quick, folks. This word begins with a C and ends with an L. It's not civil, it's criminal. I remember this lady when she ran for office, even bringing up, and this law folks kind of got involved and debated and went to their conferences and stuff like that before we all got thrown in COVID prison, about, can you indict a sitting president? Not saying that's what's going to happen, but when you see the word criminal, man, you know, even if it's a criminal inquiry into, I know she was poking around Trump University and all sorts of other stuff, folks, and some of his finances. This is, I'm telling you, man, I feel it. I've been doing this for 28 years. When I see something like this coming, I buy some protection. And actually, it's not even, well, it is protection, but it's also, guess what? Could be a very profitable trade if something bad happens, okay? So real quick, wanted to give you some breaking news, because that is kind of some breaking news. But let's get back. Here's what I definitely want to talk about, because this stock that I'm going to talk to you about probably doesn't even care about what's going to happen at 11:30. I call this stock the Death Star, and I call the service that I have here at Tompkins Options trading the Death Star. Why? This stock is literally unbeatable. I can't stand, like, what's that guy's name? Dave Portnoy and all his Robinhood traders and all stocks only go up. No, they don't. Sometimes they implode horrifically. This stock won't. This stock most likely will only always go up. Okay, so let's go ahead and get airborne. Quick disclosures. Always have to disclose what I'm trading privately in Top Gun Options personal accounts, long Amazon, long Microsoft, and short Microsoft. Got a bear call spread, long Apple, short Tesla, short Apple. Oh, there it is. And short some JP Morgan, and obviously short the S&P 500 right now. No, Robinhood didn't say only stocks go up. Dave Portnoy, Google that guy's name, from Barstool Sports. He's kind of the leader of the resistance. Check out, this was from last, I don't even remember, man. These weeks are running together. Last week when Amazon reported earnings, up $4,800 on one contract from earlier this week. One contract, 20 grand on a synthetic call this week. How about Arthur? These are all current members in my solo Amazon service. Arthur, up 101 grand in Amazon. James, 78 grand in Amazon. Dennis, Wiz, latest update on my Amazon synthetic call for June 21 expiry, up 110 on one contract. Just absolute insanity. So in case you haven't guessed it by now, what stock are we going to talk about? Guess what? It is Amazon. Before we talk about, though, former fighter pilot, always have to bring up that up. How do you know a guy was a fighter pilot? Don't worry, he'll tell you. But I have a question for you. Which fighter aircraft would you rather fly? That's choice A. Take a look at that picture right there. It's a little overwhelming, isn't it? That's why people think, oh, wow, being a pilot must be, hard. Look at that. That's the F-4 Phantom. That jet had over 300 switches and dials in that cockpit. It's pretty damn busy. Look at that. I'm getting agita looking at that. As you can imagine, the pilot would spend a lot of time what we call heads down, looking in the cockpit at stuff instead of looking outside the cockpit at potential threats. Enemy MiGs, surface air missiles, AAA, anti-aircraft artillery. Good looking airplane, fast, and actually there was another dude in there. There was a backseater called a RIO, radar intercept officer. So you're busy flying the airplane and the other guy works the radar. So that's choice A. Would you rather fly that one or that one? Folks, this is the F-35 Lightning, the Joint Strike Fighter. This thing is insane. It's literally called the Wonder Woman jet. First of all, it's invisible to radar, as Iran has found out over the past month, as Israeli F-35s have literally flown straight into their airspace, not seen, and taken out nuke and weapons facilities. You can ask me over a beer sometime what the explosion was in Beirut, and I'll leave it at that. 2 flat panel displays. That's it. This jet is so smart that it actually limits the amount of information that it displays to the pilot. It's smart enough to say, you know what, he or she doesn't need to know this right now, so I'm not going to show it to him. They actually, if you look at an F-35 pilot's helmet, he does look like Darth Vader. Everything is projected up on the visor. They can look at something, blink, and designate a target. This jet will actually display a surface air missile envelope, like put a big bubble around a threat, like don't go in there, and color it red. This is insane. So clearly, I know which aircraft you'd rather fly. It's the same one I would. It's the F-35. So do me a favor, turn everything off, silence that electronic nicotine, because you've never heard, what I'm about to tell you. By the end of this brief, I'm going to give you an up-to-date intelligence brief, what's going on. I already did that. The intelligence brief is in about 20-some minutes. This market might implode. I'm going to show you the only stock you need to own, and if you can't afford that, I'm going to show you exactly the perfect substitute that we trade here at Top Gun Options. Welcome aboard, folks. As Anna said, my name is Matthew Buckley. My call sign is Wiz. Last time I checked with my parents, they do love me. They didn't name me Wiz. I earned that call sign flying the FA-18 Hornet for the United States Navy for about 15 years. Graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and was an adversary pilot, and also flew some combat missions over Iraq. What the hell does this have to do with trading? Everything. Ladies and gentlemen, as a young aviator learning how to fly a fighter jet, I didn't join the Navy to become rich, folks. You join the Navy to serve your country and to go after bad guys and gals around the world. But I was always interested in finance and investing, and hey, taking $50 out of my first paycheck as an ensign and sending it to a USA mutual fund. I was always interested in finance, and guess what I did? I started applying everything I was learning flying a fighter jet, being disciplined, having a strategy, contingency planning, knowing when to get out of a good or bad situation before it got worse. I applied it to my trading with absolute incredible results, folks. So I essentially went from the cockpit to the trading pit and had an absolute blast. You see that building right there? That's the Chicago Board of Trade. You see those big vertical windows right there? That was our trading firm. I got called up to the big leagues, man. I became the managing director for this multi-billion-dollar volatility arbitrage firm. What? You got it, man. I helped build a hedge fund when I was there. I helped build the retail brokerage that many of you know as Options House when I was there. Just an absolute blast. And I'm not joking when I tell you that I felt like Valentine in trading places, man. You know, oh my God, this is the smart money. They're brilliant. And hey, man, they put their dress, their pants on one leg at a time as I did. And there were many times during my career in the options capital of the world where I sat in a room and looked around and said, this is the smart money. Smart money ain't that smart, folks, and I'm going to teach you that. So I was the managing director of strategy for this multi-billion-dollar volatility arbitrage firm, and I was also the founder and CEO of the Options News Network, ONN.TV. We were essentially the CNBC for options. I had a blast. I hosted 4 or 5 of the shows. We shot on the floor of the SIBO. I gave a behind-the-scenes look into what was going on in the options market for people like me, people like you, retail traders here. I also do some charity work down here in Broward County. I lost a sister to a drunk driver, so I work a lot with MAD. And then I just started my own foundation called the Top Gun Fighter Foundation, trying to prevent veteran suicide. So that's a little bit about me. Don't ever come to one of these things and just say, hey, where are the trades? I don't know this dude from a hole in the wall, but I'm going to listen to him about finance. That's just dumb. So stand by, because this is going to be shocking to you, but on some level it's not, right? Wall Street's lying to you. They've been lying to you since day one. They've absolutely been lying to you. What do I mean? Ever hear the Wall Street-ism from your broker, from whoever? You cannot put all your eggs in one basket. Don't put your eggs in one basket. This is, you must diversify. You have to diversify. Diversification is important. You must diversify. If you don't diversify, they froth at the mouth, ladies and gentlemen, about not putting your eggs in one basket and diversifying. It's a lie. Why? That dude. Anybody see the movie, Wall Street or Boiler Room or, the Wolf of Wall? It's, folks, commissions. Whenever you hear the term broker, I don't care if it's a real estate, yacht, or plane broker, or your financial broker, they make money off you doing something. They make money off you trading. Commissions. You ever hear the word churn? They'd walk out on the floor and say, boys, open up your contact list and get the little old lady in tennis shoes into Blue Horseshoe or Love's Anacott Steel, whatever. They make money off of you. Well, Wiz, commissions are going lower or maybe even going away. They make money off of order flow, folks. They're not a charity. So they've been making money off of you trading. They want you to diversify. They want you in 50 names in your portfolio because they make money. I'm going to tell you, folks, that diversification is for people who don't know what they're doing. He actually said it better than I did. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. He said it in a nicer way than I did. The only stock you need to own, period, is Amazon. Picture's worth 1,000 words. I haven't updated this yet based on the earnings last week. That's insane. Folks, I've been doing this for 28 years. I've never seen earnings. The numbers don't make sense to me at a certain point, folks. When I was going through Amazon last, I'm like, you can't. That's why I call this the Death Star, ladies and gentlemen. But don't listen to me, folks. These are current TGO members with their Amazon positions. David, 51 grand, signed up for solo Amazon, just made 300% on my first trade in a week. I'm not gonna beat the drum with all these guys. This is just fantastic. Sam bought the 300 calls and made 80 grand. Amazon is going. It'll be a $4,000 stock by my birthday, subtle plug, on December 31st. Now, before I sit here and pump and talk how everything's great in just one name, hey man, I'm a fighter pilot, I'm an options trader. There are risks to just trading a single name. Let's go through them. Anybody ever hear of the company, the financial firm called Lehman Brothers? How about Bear Stearns? Jim Cramer certainly remembers Bear Stearns. At the height of the financial crisis, Jim Cramer looked like Khrushchev at the UN, bald guy pounding his shoe on the table. If you don't buy Bear Stearns at 70, you're an idiot. It's a steal at 70. 2 days later, Bear Stearns was at 0. Jim Cramer doesn't like to talk about that. Pets.com, Enron. Folks, these companies, the graveyard of companies that have gone to zero, of stocks that have gone to zero, it's huge. I could spend the rest of the day telling you about all the companies that have gone to zero. What's the common thread between just about every one of these companies? Folks, they didn't own a damn thing. Pets.com, they owned a stinky sock and a domain name. Enron, they didn't even own the building they were in. They were a middleman of electricity. Bear Stearns, Lehman Brothers, they owned air, contracts, pieces of paper. They didn't own anything. Folks, Amazon owns everything. Go take a look at an Amazon fulfillment center. It's larger than an aircraft carrier. 5 years ago, I flew for FedEx for like 10 months. I hated it. Long story. Anyway, I still have a lot of buddies who are senior, very senior now at FedEx. 5-6 years ago, a buddy of mine in corporate called me. He's like, dude, just talked to a buddy of mine in GE aircraft leasing. Amazon just leased 5 airplanes. I'm like, he's going to do it. He's going to build his own FedEx and UPS. Wow. So they have Amazon. Anybody know what AWS is? Amazon Web Services. Hell, folks, Amazon Web Services by itself is bigger than like Microsoft. They just trademarked Amazon Pharma. There will be no Walgreens or CVS in a couple years. You will get all of your medication and everything from Amazon. That's a fact. Another potential threat, that dude, right? About 2 years ago, he woke up, or maybe he didn't even go to bed from what I hear, grabbed his cell phone and started ripping Jeff Bezos apart. He doesn't like Jeff Bezos mainly because of the Washington Post, because the Washington Post rips apart the president. But what's the potential threat? Not Donald. He went crazy. He had they're destroying the post office. They're using the post office. You know what Jeff Bezos did? He didn't do anything. He didn't say a word. Why? Because he knew in the background he's building his own post office. He leached off the U.S. Post Office for long enough, and now he's going to go build his own. But you saw Jeff Bezos, it was last week. He took some heat for his business practices and stuff like that. But at the end of the day, I'm going to tell you at Top Gun Options, I wear 2 suits. I'll tell you how he feels an American. I think Amazon's too big. I think it's anti-competitive. I think it's awful. They should be broken up. Then I put on my Gordon Gekko Armani suit and go, I think it's fantastic. I love the way they got with small companies, looked at their ideas and said, oh yeah, great meeting, and then went and built it on their own and put that guy out of business. Sound harsh? Hey man, I'm a shareholder. I want this thing to go up. I'll tell you over beer in my flight suit how I feel, and I think it's awful. Jeff Bezos, the richest man in the world, can't even afford to protect all his employees with PPE equipment. Don't get me started. But I'm here to make money. Just like Gordon Gekko said in the movie Wall Street, want a friend, get a dog. You want to make money? You talk to me. But all right, now that I sufficiently briefed you on the risks, what are the benefits? Folks, if you're just trading Amazon, you ready? You're just trading Amazon, and you can potentially profit no matter what direction it goes, up, down, or sideways. You stay focused on news that just drives that name instead of a bunch of stocks and ETFs. You become essentially an expert in Amazon, reducing time spent on other positions. I'm going to tell you, folks, one of my best friends is an Apple market maker. I'm not kidding when I tell you that he doesn't know a stock market exists. He doesn't care. He doesn't know what the VIX, he doesn't know anything other than what? He eats, breathes, sleeps Apple. I have a good buddy down here in God's waiting room in Boca Raton. He's a surgeon or an orthopedic guy, 8-hour, 12-hour days, office hours, surgeries. And he's like, hey man, I need your help. You know, help me invest, trade, blah, blah, blah. I'm like, okay, let's meet. I'll never forget this day, man. He opened his laptop. We're back when you could sit in Starbucks. And I didn't hate Starbucks. He opened his computer, booted up his laptop, spun his laptop around with his brokerage screen. I fell out of my chair. Thank God he was a doctor. His portfolio looked like that. What do I mean? You ready for this, folks? He had 33 positions. Folks, I do this for a living, man. Anything more than 5 to 10, you don't know what you're folks, there are analysts whose job it is for 8 hours a day to know a company. Look at Apple last week. Goldman Sachs came out and said Apple's going to have horrible earnings and we'd get bearish on the stock. Wrong. How can you, as a lowly quote unquote retail trader with 30, he's like, well, I think this is a pot stock. I don't know what that is. This one, it's really down a lot, but I'm waiting for it to come back to get out of it. This one, I'm like, stop, Doc, stop talking. I can't. You're giving me agita. 33 positions. Is that you? Why don't you simplify your life and simplify your trading cockpit? And this should be you, man. I'm not kidding you. Simplify. Now, if you're sitting here going, you know what? This is a great idea. I am flying an F4 in my trading cockpit. But if you're still a little creeped out about, you know what, man, I still feel I need to diversify. Guess what else we trade in this portfolio called Solo Amazon? XLY. What? I trade the ETF known as XLY. Why? I'll tell you. Take a look at the top holdings of the XLY. What's the number one holding? It's Amazon. The consumer discretionary ETF is made up of 25% Amazon shares. So it's a good proxy. It's also not $3,200. It's $100 and whatever, $20, $30 ETF. But here's your diversification, ladies and gentlemen. Amazon, Home Depot, McDonald's, Nike, I don't care for, Starbucks, I don't care for, Lowe's, Booking, TJX, Target, and GM. There's your diversification. Okay, so if I can wean you off having 33 stocks into maybe just the XLY and Amazon, you'll be pretty good to go. So how do we trade these, Wiz? I'm listening. How do we target Amazon and XLY for max profit? Well, the first thing I'm going to do is I'm going to teach you that we establish a base position. What do I mean by that? I can hop in my F-35, that Joint Strike Fighter, and fly out into the future. In the options market, I can go out up to 2 years into the future and get bullish, right? I call that a base position. I will teach you how we use what we call synthetic stock or long call diagonals to get long-term bullish on Amazon. I was one of the only I love when people come out with price targets like our new price target for Amazon is 4,000. I'm like, when? Well, yeah, they don't tell you that. I do. I failed this year, folks. A year ago, when I started Solo Amazon, I said Amazon, well, it was like $1,600. I said Amazon will double. It will be a $3,000 stock by my birthday, December 31st. I failed. Why? It hit $3,000 3 weeks ago. What a failure, Wiz. And you know, as soon as it hit $3,000 a couple weeks ago, you know what I did? I gave a date, 4,000 by my birthday. So I'm going to show you how we do our base positions. Then after we have a nice base established out into the future, we do what? We trade the front months. What are the front months? You're sitting in a front month, folks. What is this, August? August, September, October. We'll trade the front months. If Amazon or XLY are going up, we trade bullish spreads. If it's going down, we go bearish. If it's kind of moving sideways, which is rare for these names, we do an iron condor. Okay, so that's kind of the service here right now. So let me show you what we did this week in Amazon. And we have 5 minutes, folks. I'm telling you, this is going to be really interesting. Keep an eye. Let me go back to the S&P 500 real quick. I have to keep an eye on this because I got a trade, man. This is good stuff. SPX. Look at that implosion. So we imploded. That was a gap down. We are officially at half the gap. Gap down. Half the gap is right here. Where did the market come up to twice and fail? Wow, that's a huge sell order, man. Something's going to happen. I got my puts. We're ready to go. All right, so here's what we did so every Monday at 1 o'clock, not 1 o'clock, I'm sorry. Every Monday, here it is right here. Solo Amazon sessions are every Monday at 2 p.m. Look at what we did this week. We did a bull put spread, the 30-60, 30-55 on Amazon. Let me show you the orders. This is my personal account right here, last 3 days. Where's Amazon? I think I have to do last 5 days. There it is. The 30-60, 30-55 bull put spread. I did 30 contracts at $1.43. Got out of Amazon yesterday, right? Actually, last 10 days. Where is it? Where's my Amazon? There it is. So this was about a $4,200 profit since Monday in Amazon. What's my current Amazon position? I am long the September 3,500 calls. Now, I'm going to tell you the reason. I thought you said, would you go like years out in time? There is no way on God's green earth I'm going to go out any further than, you ready for it? October. What? Why? I'm going to put a wall right here. I call it the drink wall. D-R-I-N-C. Between now, where we're sitting, and November, what happens in November? Anybody been paying attention? Is an election. Usually, if this was an election year, I would have gone out to January or next January and gotten bullish on Amazon. The world, ladies and gentlemen, something bad is going to happen in October. You ever hear the term October surprise? It's an election year. The DRINK acronym stands for Democrats, Russia, Iran, North Korea, China. Every letter in that acronym between today and election day is going to do something. I think you're going to see something in 2 minutes if the press conference is on time. Let me bring up all my news stuff and just have this in the background here. So the reason I stopped with September Amazon long calls is because of the drink wall. Okay. We've already seen this with China, folks. It is getting ugly with China. In my opinion, I have a lot of military contacts. I'm 15 years in the military. US, Taiwan cannot shake the mainland's bottom line goal. Between now and the election, lady, you know what their bottom line goal is? Let me read it. The Global Times is like the Chinese mouthpiece. What's the bottom line to China when it comes to Taiwan? We already lost Hong Kong. I'm not happy with the president and how he handled Hong Kong. Here's China's bottom line on Taiwan. The mainland has many cards, including the military card. More importantly, it is much more determined to play the cards than Washington. If I were Xi Jinping and the Chinese Communist Party, after watching what the world did when they kind of cracked down on Hong Kong and said, you're not Hong Kong anymore, you're part of China, the world did nothing. There was protesters running around Hong Kong with American flags, with spray painting Patrick Henry quotes, give me liberty or give me death stuff. And you know what we did? We did nothing. If I was Xi Jinping between now and the election, because you know why, folks? I've sailed through these waters. I've taken part in the defense of Taiwan exercises. We have an agreement that we will defend Taiwan if mainland China ever tries to take them back. If you were the Chinese Communist Party after getting the world and the United States sick, wouldn't you take Taiwan back before Trump? What's Trump going to do in front of an election? He's going to go to war with China? These are the things I'm going to teach you how to think strategically about these things. If you're just sitting here kind of staring at trades and you don't have your head up looking outside at the radar, you're doing it wrong, folks. I mean, it is getting ugly between the United States and China. We're not even, there is no, everybody remember the phase one trade agreement? The president had people, in the West Wing, Vice Premier Leah He, he took an hour to get to the signing, to the physical signing of the phase one agreement, because he took an hour-long victory lap. There is no phase one trade deal, folks. They haven't even bought a soybean from the United States. Okay. Well, why am I rambling about all this stuff? Because I'm telling you why I don't have a base position further out in time, and it's smart. I believe there's going to be some sort of something in October, man, and I'm going to be hedged and ready to go for it. Okay. Now, what's the good, Wiz? Stop talking bad. Well, it's only bad if you're just completely bullish and you don't have any hedges on, or if you're not trading options and you're ready to pound this thing into the dirt when, not if it rolls over. What's the good? The good, folks, is I think we're drag racing a vaccine. If we get a no-kidding vax before the election, it can only help the president. So we got two ships, man. We got this ship and we got this ship. And as an options trader, I'm going to teach you how to do trade in both of these environments. But let's get back to Amazon. The COVID crash, ladies and gentlemen, was without a doubt one of the best things ever to happen to Amazon. And it's, let me put my flight suit on. It's heartbreaking. Small businesses are getting destroyed by Amazon. Since we all got thrown in prison, look at this. Here's the COVID crash for Amazon. Until everybody realized that you're sitting at home watching Amazon Prime and ordering yoga shorts off of Amazon. The COVID crash was the best thing to happen to Amazon. It's supposed to be at 11:30, guys. It's officially 11:32. I got all my networks up, so they'll break in. I guarantee you they're going to break in. I'm going to keep the SPX in the background here because usually the market knows before the media knows, which is interesting. Let's keep the S&P up here. There we go. All right, so here was the bottom, here was the top. If we break through this range here, what is that, 33.20 with some airspeed? It's lookout below. So we'll monitor this. But let's stick with Amazon because I'm going to tell you how you can join our solo Amazon service for essentially the cost of a nice bottle of wine here for 30 days to give us a try. Because I am going to talk about all the stuff. You know, I do solo Amazon every Monday at 2 in the afternoon, and it kind of kicks off the week. So the solo Amazon service is a great place to be to kind of get a how goes it for how the week's going to look. But Amazon, folks, has literally destroyed better, and they're only going, this is a triple top, this is a double bottom, but I could not be more bullish on Amazon. What would I do right now? I would be buying, well, I already, now what would I do? What have I done? I am long the September 3,500 calls. Okay. In September, October, I'm going to reevaluate. We will know more in October. There's what, 90 some days to the election? Strap in, ladies and gentlemen. If you don't think Trump or the Democrats are going to do whatever they can to make the other side lose, you're nuts. The volatility, the VIX is going to go through the roof. We have seen an extended period of low volatility. Look at this. A little bit of a freak out. Nothing. Look at the VIX all the way down here in Nothingville. If you've learned nothing from my brief today, take this away at least. Buy some damn calls on the VIX out 30 days and put them in a safe deposit box. Because in the blink of an eye, in the blink of a breaking news from the New York Attorney General, the VIX can be up 10, 15, 20, 30% in the blink of an eye. This is insanity, the VIX being this low with everything that's going on. If they mention the I word here in minutes, all bets are off. I got some long VIX calls on in another portfolio, and I'm geared, you know, as an options trader, man, I'm geared for any C condition, right? We broke through this level on the S&P. This was kind of a ceiling, and now technically it's game on. It's even more game on because of why. How about that headline? How about that headline? U.S. Treasury set to spend trillions in the next few months. Folks, I call it the hopium. The Federal Reserve has gotten us high on the hopium, and this market is just going higher. Trust me, my skin crawls when I say that to myself, but I'm also smart. I got my long VIX calls on. I got my S&P 500 puts. I am ready in the blink of an eye. I'm flying a tactical fighter jet in the options market. In the blink of an eye, I can pull on the stick and pull 9 Gs from being bullish to bearish. I'm not some massive hedge fund with 100,000 shares of Microsoft I have to dump, right? We can maneuver and be very, very nimble as options traders, and that's what I'm going to teach you to be. Because right now, you need to be very, 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 very nimble. Okay, and the S&P. This is interesting, man. The S&P is trying to find what it's going to do right now. So either this lady who's late, and I can't stand people who are late. That's why I'm going to keep us on time. The market is. This is going to break one way or another. And I'm just glad I have my puts on. Yeah, you bet. Thank you for the heads up on time. I do want to go watch this. So let me let you know how you can get on board, because this is awesome. Solo Amazon is at Tompkins Options is our newest live trading service. I do 4 other live trade briefs, but this one is only dedicated to that name. The other services are about $1.67 a month, but since we only trade Amazon and XLY, it's only 97 bucks, man. I actually went out in Fort Lauderdale the other night, broke out of prison to go see some of my buddies, and that was essentially what I paid for dinner. And I gladly pay that because people are getting destroyed here. Here's where you need to go. TompkinsOptions.com/solo-Amazon-monthly. That's a little long. Let me go grab the URL for you so you don't have to sit there and type it in. It's starting now? Okay, good. Perfect timing. All right, so it's in the chat box. Oh, let me send that to everybody, the entire audience. It's only 97 bucks a month, folks. And if you're an advanced reader, you already looked down here. Check this out. I'm also going to give you access to our primary, intermediate, and advanced workbooks. These things are a must. These are your flight manuals. If you go to my homepage right now, they're 197 bucks for these 3 manuals. Do the math. If you're a political science major like me or a Navy fighter pilot, you just did the math and said, wait a minute, I'm essentially making 100 bucks on this deal. Yeah, then you know that it's a good trade. You get 3 manuals that are worth 197 and you're only paying 97. So yeah, that's in the business is what we call a no-brainer. Okay, so year to date, we're looking at about $80,000, up $80,000 in Amazon profits. Couple losers in XLY at the turn. At the bottom in March-ish, I had a couple bear call spreads on XLY, so I will always point out there are losing trades, but guess what? We're destroying it in Amazon. So down at the bottom, when I thought the market was going to implode even more, I wasn't ready for Jerome Powell to jump in with his size 12 boots to get bullish. Okay, hey, Wiz, I work for a living, man. I can't attend Monday at 2. 80% of our members work, but if you can't attend, guess what you're going to get? A time-sensitive text and email alert. I send it before the brief, sometimes during the brief, sometimes after, but you get it when everybody else gets it who's in the webinar. There's a screenshot of my phone on one of my text alerts that I sent out on XLY, and then an email comes out with a screenshot of the trade as well as the metrics of the trade. How much is the max potential loss? How much is the max potential profit and everything like that? And guess what? About 30, 45 minutes after the brief, I sit here, wait for it to render, and I post the replay up on the member page, okay? Again, regularly 197 bucks for these 3 manuals. You're going to get them for the 97. You get a month access into this service for only 97 bucks. Access to the brief, the text and email alerts, the 3 skill-based manuals, and access to what we call our Ready Room. It's kind of our online forum where you can ask me a question. Your fellow members get together. The Ready Room's awesome. I learned more about flying and fighting the F-18 than in the Ready Room than I did from any manual. It's all NRA charity related so far. They want to disband. Oh, okay, so it's not necessarily hitting Trump directly. Okay, interesting. Mr. Parmar made 200 grand in Amazon on 20 contracts. Kevin, Amazon, synthetic stock, late to enter, up 200%. He paid 8 grand. It was up to 24 at that point. Diane, 70 grand with one contract. That's the power of trading this type of stock, folks. Scott, hey Wiz, up 20 grand in September and Amazon and October. Amazon calls. I have never been there. Patience, persistence. Thanks, Top Gun Options. The list goes on and on, folks. I don't want to sound like a pump and dump guy. Amazon doesn't only go up. Matter of fact, we saw that massive spike a couple weeks ago, and it had a massive give back of that. But we trade it, folks, right? I can sit here with a long-term bullish trade on, like long calls, and I could kind of be bipolar, and so am I, right? We could be long-term bullish or medium-term bullish, and then short-term bearish. That's how you do it, man. And think about that. If we have a long-term bullish trade on Amazon that's a trade. And then we trade a spread in the front month. That's 2 trades. So right now you already have kind of 2 trades on. Remember Doc with 33 trades. And let's say we throw in an XLY trade as well. There's 3. That should be it, man. Don't fly around with some really super busy trading cockpit, man. You're going to get hurt. Solo Amazon for only $97 a month. Today, I'll tell you what, I'll give you a 25% discount if you do an annual membership. Let me go do that. Let me give you the link for the annual, because I'll save you money. It's 25% discount. So right now, you're already making money on that trade. It's only $897 for the year. And I made $4,200 this week on an Amazon bull put spread. So essentially, there's 4 years of the solo Amazon service that I did Monday, and I closed it yesterday. Okay, when you grab your your solo Amazon slot, this is a must, ladies and gentlemen. Please listen to me. If you haven't listened for the past 41 minutes, sit up. Next Tuesday night, starting at 7 p.m. Eastern, I do full throttle training for 4 weeks. Every Tuesday and Thursday night, 8 sessions total. I start with, this is a call, this is a put, this is the market. Okay, so it's only $195. Other places charge thousands of dollars for the training that you get from me, and it's robbery. It's a disgrace. So make sure when you go grab your solo Amazon slot, take that offer to join me starting next Tuesday night at 7. I can't make it. They're all recorded, man. You get access. I grab a bottle of wine. I sit here from 7 to 8, 8:30, and we'll talk about bull put spreads, a call option, volatility. This is your flight school. So please, please, please make sure you do that, because it starts. We do these once a quarter, and you're lucky because it's starting next Tuesday night. There's kind of the syllabus of what's going to be covered. So great stuff. Okay, Solo Amazon, ladies and gentlemen, our newest live trading service. It's only $97 a month. Go ahead and go there, folks. Even if you didn't learn anything from me today, and it doesn't compute just trading one name, simplify your trading cockpit, ladies and gentlemen. Those might be the only 2 names you trade for the rest of your trading career. Amazon is just unstoppable. And remember, Wiz, the FTC is looking into breaking it up. Does anybody remember Standard Oil or Microsoft or AT&T? 5, 10, I think the one was 50. It took like 15 years to even come up with a recommendation on what to do. So remember, folks, Amazon, the parts are worth more than the current company. If they spun off Amazon Air or AWS, all you did was just create a competitor at the top of that category. So almost like if they did try and break up Amazon, it would be worse. So I just don't, that's a potential threat, but I just don't think that's going to happen. Okay, awesome. Great stuff. Love being here. Like I said, 25% discount if you go to /solo annual. And then get your feet wet, man. Do it again. It's a nice bottle of wine, $97 for 30 days. At the end of the 30 days, shoot us an email that says, hey, man, I want the discount. We'll go ahead and honor that. You can get your 25% discount at that time. Yep, one last check. What says? Ooh, here we go, man. This is the battle there, right there. If we break this 3,200 with some airspeed to the downside, it's going to be lookout below here. So keep an eye on this stuff. Okay. All right, folks. I got to get going. Have a very busy day. I'm going to keep my eye on it, and hopefully everybody stays safe. Please stay healthy. Okay. Have a great rest of your day. Happy hunting. Make sure you hedge. And God bless. Anna, thanks for having me, and I look forward to working with you all again sometime soon.
Well, thanks again for having me. Welcome, everybody. Thanks for attending. We've got some really exciting stuff to share with you guys today. In fact, I've just recently revealed my new slingshot setup to our current member and student population that I'm going to share with you guys today for the first time on the InvestorExpos event. And it's really exciting. It's the only trade that I've ever found in my 20-year trading career that actually has 100% accuracy going back to the beginning of the market. So that's what I'm going to be talking with you guys about today. And you're going to walk away with some really great actionable advice and education that you can implement in your own trading by the end of the session today. So before we get into the fun stuff, I'll just read a quick disclaimer. We all know that trading securities and options does involve risk, and prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. Of course, you do need a broker to trade securities and options and must meet suitability requirements. We will be going over some different performance figures, and just know that we don't guarantee that you'll mirror the performance of anything that we share in the presentation. And of course, past results are not necessarily indicative of future performance. All right, so with that out of the way, let's get into the fun stuff. So many of you may recognize some of these faces, or maybe all these faces. And these guys have a lot of things in common, but there's one thing that these famous traders have in common that we're going to focus on today, and it might not be what you'd expect. They've actually all bought high and sold low. In other words, they've all made mistakes in their trading and investing. Although they're all very successful traders and investors, they have made the mistake of buying high and selling low. And why? Because they're human. Because we're all subject to emotions in our trading and investing, and we're all subject to making mistakes and entering and exiting trades. And it's really one of the main reasons that markets are so difficult to trade. And a lot of it can be boiled down to psychology. So you may have seen a psychology curve like this at some point in the past. And what it shows us is kind of that roller coaster of emotions that we go through when we enter a trade or get into a longer term investment. And that usually starts out with some degree of optimism, right? We're not going to get into a trade if we don't feel some degree of optimism, if we don't have a positive outlook on the outcome of the trade. And so this is generally where we'll start out, and we'll enter the trade, we'll get enthusiastic, even exuberant and euphoric as maybe the position starts to kind of work out in our favor. And in fact, this is when we need to be the most cautious, because when there's a high level of financial risk in the markets or in a trading strategy or system that you're currently using, that's generally when the vast majority of the crowd gets greedy and starts to buy. And then as things go wrong, as they inevitably do, we often quickly shift from that euphoric, exuberant mentality to more of a anxious, fear-based mentality, and we start to panic. And this is why a lot of times traders and investors end up failing over the long term, is because they're following this psychology curve and all the decisions they make in their trading strategies or systems in the markets. And in fact, when things start to go bad, and we'll get into the recent Corona crash here in a little bit, this is when people are panicking. And in fact, we should have a contrarian approach and actually be greedy when others are fearful. And really, this can, counterintuitively be the best time to actually invest in the markets. Okay, so basically, the psychology of failure in the markets can be boiled down to a few bullet points. So anytime we enter a directional trade, obviously the goal is to buy low and sell high. But unfortunately, that does go against our human instinct. And instead we end up selling a security when it's going down, and then we buy when it's already gone up. And it's really interesting if we look at the current levels in the market right now. This is actually occurring, and we'll get into that in a little more detail here in just a little bit. But what we do is we ultimately end up panicking when the price is falling because we're afraid of losing money, right? We all have that fear because there are unknowns in the market. And even if we have a really good strategy, once we implement that strategy, there is a lot that's out of our control from that point on. And then we often buy when it's rising because we're afraid of missing out. It's that whole FOMO mentality, the fear of missing out. Okay, and again, that's kind of what's happening in the market right now, as we all wonder, how are we, approaching new all-time highs on the S&P in such a dire situation in the economy with the pandemic of COVID-19. Okay, and so we'll discuss that a little bit more. But then to compound the problem, we're wired to repeatedly make this same mistake. So we buy high and sell low because that's what our emotions tell us to do. Again, it's human nature, and it's why famous investors like Warren Buffett and Carl Icahn have all made that mistake, because they're all human, right? So don't blame yourself. It's simply human psychology. But the good news is there are some techniques that I'm going to share with you today that can overcome these drawbacks to trading and investing. So basically, without a solid trading plan, we're really vulnerable to these emotions. And in addition, if you're lacking a strategy that can identify momentum shifts, meaning you don't know when to get in or buy low or get out and sell high, this can pose a major problem for inexperienced traders and investors. Okay, and again, we're going to solve this problem today. So what we're going to do is we're going to turn the tables. All right, so if we take a look at this trading psychology curve again, rather than following the crowd, 90% plus of other traders and investors who end up failing over the long term, we're going to turn the tables. And instead of being greedy during the highest level of financial risk, we're going to be fearful. And instead of being fearful when it's actually the best time to place a trade or get into a position, we're going to be greedy. And it's that old Warren Buffett saying, be fearful when others are greedy. And to add to that, we're going to be greedy when others are fearful, okay? So when other people are panicking, like they were in the recent Corona crash in February and March, we're going to be looking to get into the market. And I have a very special setup called the slingshot that can help us do this. Not only can it warn us of a pending sell-off in the market, it can help us get in at the market lows, and it can help us get out as the market rebounds for a profit. Okay, so what I'm going to give you guys today to make it easier is you'll discover that my one slingshot trade that's worked 100% of the time in every market sell-off, black swan event, market crash, bear market, you name it. This setup, going back to the beginning of the stock market, has worked 100% of the time. Okay, so there's very little that I've encountered in my 20-year trading career that actually occurs 100% of the time. And this is the one thing that I've discovered that actually does that. So I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top, how to apply the setup to any market in any time frame. So regardless of what market you're currently trading or what time frame you trade, if you're a day trader, a swing trader, a position trader, we can apply this methodology to any time frame. I'll show you how to eliminate the majority of your losing trades using a really cool little trick that I use in my own personal trading. And we'll look at some trade examples together. And then if you stick with me to the end of the session, I'll show you how you can copy my success and get my trade signals I use to make a living in the markets. All right, so we got a lot of fun stuff ahead. And we're going to start out by imagining if you could buy low and sell high without any guesswork, right? That's every trader and investor's dream. And it's not much easier said than done. It's not easy to do. Let's just be honest about that. All right, but there is one volatility study that's made this possible since the beginning of the markets, and that's what I'm about to share with you. And it's a unique setup that I've deemed the slingshot setup, and it's basically if you look at this setup, once you learn it today and go back to the beginning of the markets, it's allowed traders to buy low and sell high with 100% accuracy. And again, there's really nothing else like that out in the market today that can allow you to trade with such accuracy. Now, these events don't happen all the time, but when they do, they can be incredible money makers. And it also warns us of potential market sell-offs, right? Again, our biggest fear as a trader or investor is the unknown. We don't know when the market's going to crash or to what extent or magnitude that crash is going to, what we're going to experience during that crash. But we can be prepared, and I'm going to give you the tools to be prepared for the next market sell-off. There's always one around the corner. Again, we just don't know when, but I'll help you basically determine when the risk is high and other people are getting greedy, and we should be looking out for these market crashes. So once the bands of the market cannot be stretched any further, they must bounce back, okay? And I'm going to get into what these bands are here in a minute, but it's an inevitability in the market that has to occur, okay? And then this rubber band effect is what makes it possible to accurately identify these tops and bottoms in the market. And so we'll get into this here in just a second. So let's start out by looking at a chart of the S&P 500 index, the SPX. This is a daily chart. And you'll notice that it does encompass that dreaded period of February and March where the market lost over 30% of its value in just a matter of a couple short weeks, okay? And prior to that, we were in this really long, unprecedented, decade-long bull run. And this is where people are getting overly optimistic, euphoric, exuberant, all those human emotions that I showed you on that trading psychology curve a few minutes ago, okay? And so we reach an all-time high in the market here in February, and people are getting in. They have that FOMO mentality. They're afraid of missing out on future profits. But like I told you a minute ago, this is when we should be fearful. So when most traders are buying, we should actually be selling. There's the Corona crash in February and March. People are panicking. They're losing money. They're unwinding positions. They're getting out of the market. But we should actually take a contrarian approach and buy when most traders are selling. And then what happens? And ask any trader and investor right now, and everybody's just blown away how the market could be all the way back up to where it was with, before the crash occurred, in the face of such dire economic circumstances. But it occurs over and over again. And this is the slingshot setup that I'll show you here in a minute. But this is when we should be selling, when most traders are buying. And this is kind of where we are in the market right now. I mean, I took this screenshot a couple of weeks ago. So we've pushed higher now, but we're getting back up to that near that 3,400 level on the S&P where we were at previous all-time highs. Okay, so we need to be much more cautious and take a contrarian approach. And this is where we'd be looking to sell and take profits. Okay, so we're doing the opposite of what everybody else is doing. So before I get into the slingshot setup, if you haven't attended any of my previous educational events, I'll give you a little background on myself. I do have 20 years of experience trading the stock, options, and futures markets. I received my professional training at Morgan Stanley. I'm also the founder and chief investment strategist of Altos Trading. We currently have over 30,000 members in over 100 countries across the globe. I'm also a professional hedge fund manager. I do manage money for my clients at Altos Capital. And I'm also the founder and creator of the Trade Trend Signal software, which I'll be sharing with you guys a little bit about today. So by the end of our session, you're going to discover one trade setup that's produced massive returns going back to the beginning of the stock market. In fact, this event's so reliable, it's worked 100% of the time. Guys, most things that you encounter, most strategies, systems, things that other educators teach you only work for very brief periods of time and then they fail. Okay, this is an exception to that, and it's not failed even once, including the recent Corona crash. So not only can you go back to the beginning of the market, I can also share the most recent one of the most severe, if not the most severe market sell-off we've ever seen in terms of magnitude. And it's worked in that circumstance as well. So it happens over and over again with astounding predictability. And whether you're just starting out or you're a seasoned pro, we have members who use these techniques of all skill levels. It's really must-have information for today's markets, okay? So you're gonna discover why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off, and this will completely turn your trading around, how to identify when the market is likely to go up, how to determine exactly how far the market is likely to go up. This is one of the most difficult things to do in trading. We can all enter a trade fairly easily, but once we get in the trade, we don't really know when to get out. It's very difficult. So I'll also show you how to get your hands on a tool that will change your trading forever. And I say that because it's changed my life in trading forever. And I do trade for a living, and it's really allowed me to do that with consistency and make a lot of money in the market. So I'm going to share that with you. So let's imagine a slingshot. Okay, we're all familiar with the slingshot. We know that as we pull a slingshot back, that the muscle energy from our arm is then transferred to the energy in the bands of the slingshot, okay? And then after we release it, the elastic energy is transferred to the stone or whatever we're shooting out of the slingshot as energy of motion. And this is actually what's called kinetic energy in physics. And we can apply this to the markets because kinetic energy is very similar to demand or buying pressure in the market. Okay. And once the band becomes overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay. So hopefully that doesn't confuse anybody, but don't worry, we're going to look at this in practice here in a second. And we'll look at how to apply this slingshot technique to the markets. So first, to understand this, we need to know that, again, volatility is a forward-looking predictive indicator, and it can tell us when prices move too far away from the mean or the average and is likely to reverse direction. And so we're going to use an indicator that many of you have likely heard of and maybe even used yourself, and it's available on virtually any retail trading platform, called the Bollinger Bands. But I'm going to show you a way to use it that you've probably never considered. There are a lot of ways to use this indicator, and we'll get into a few of those, the common ones here in just a minute, but I'll show you one of the best ways to use it. And again, it ties in to the trading psychology curve that I showed you earlier, and it helps us use a contrarian approach to do the opposite of what most failing traders and investors are doing. So it is an incredible indicator, and again, it's available on any retail charting platform, and it can help you pinpoint turning points in a security with astounding accuracy if you use it correctly. That's the big if, okay? Like any other indicator, there's right and wrong ways to use them. Now, you'll notice in the center of our screen here, we've got a chart of, I think this is actually another SPX chart, and I've got the Bollinger Bands plotted on the chart, okay? And if you think of that psychology curve, when people are getting over exuberant and overly optimistic, this is when people are buying. But here is where we're going to actually sell, okay? Contrary to what other traders and investors are doing. And then you see there's a nice little sell-off there where people are panicking, unloading positions, taking losses. We're going to come in as buyers and take advantage of this. And then we're going to get out when the rubber band snaps back or the slingshot releases, okay? So this is what kind of what the slingshot effect looks like. And I'll get into more detail on this in just a second. So I mentioned there's a number of ways to use the Bollinger Bands, okay? And basically what they are, they're 3 lines on your chart. So a center line, which is your moving average or the mean, and your 2 outer bands, which are basically 2 standard deviations away from the mean. So up and above and below the mean or the moving average, the center line. Okay, and so there are a lot of ways that we can use these bands, and these are some of the more common ways that traders use them. One is to buy at the bottom of the band and then sell at the top of the band. And the problem with that is that price can hug the upper or lower band for extended periods of time. So this may work here and there, but when it fails, it can fail big. And this is, a circumstance where you can wipe out a lot of little winners with a major loss. Okay, so that's not the best way to use the Bollinger Bands. Another common way is band contraction and expansion. So this is basically when there's a volatility expansion, when the bands are very close together. It can be a good indicator of an impending big move in a security. The problem is we don't know in which direction the move's going to occur. So that's also not a very effective way to use the Bollinger Bands, okay, unless you're using very specific option strategies. Another way is to buy or sell at the middle band. And this one actually can work pretty well for directional traders, but it really only works in strong trending markets. So it's going to fail a lot of the time in a sideways ranging market. So again, not necessarily the best way to use the bands. Now the slingshot setup, which is a proprietary setup that I've developed using the Bollinger Bands, is where we wait for the lower band to break. And then price will hug the lower band, as we'll look at here in some examples, and ultimately rebound to where the breach initially occurred. So this from what I've found in my own live real money trading experience over the last 20 years, is the best way to use the Bollinger Bands. And so we're going to look at how to do that in practice here in just a minute. And we're going to look at how to use the Bollinger Bands to buy low and sell high. Now, if you're not real familiar with the Bollinger Bands, I'll just give you a quick, again, just a kind of a quick high-level overview of what they are. But they are a technical analysis tool or an indicator defined by a set of trend lines plotted to standard deviations. So those are your upper and lower bands away from the simple moving average, which is the middle band. All right, they've been around a long time. They were developed, I think, back in the 70s by John Bollinger. Really for the purpose of giving traders a higher probability of identifying when an asset is overbought or oversold. But we're gonna really use them a little bit differently. So with the Bollinger Band slingshot, as I mentioned, price can exceed or hug a band envelope for prolonged periods during strong trends. So what we do is we wait for the lower band to break, and then we wait for a buy signal. And then we exit when price returns to the breaking point, okay? So let's look at that here in just a minute. But I'm gonna give you some examples of how this works. Because I mentioned, and this is a bold statement, I realize, but I challenge you to go back. And I mean, the pure fact that we were in an all-time high in the market back in February really basically demonstrates that this has worked 100% of the time, because you can imagine any sell-off, black swan event, market crash, bear market we've been in, we've overcome that every time, right? So it's basically in the slingshot setup, the markets, the major markets or the indices have returned to the initial volatility breakout with 100% accuracy, okay? And that includes all 4 major market corrections we saw back in 2018, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis. That's when the market lost more than half its value. Going back over 20 years, the 2000.com bubble, even the recent Corona crash. Every black swan event, market correction, major crash, bear market, you name it, it's worked 100% of the time. So let's look at the slingshot in the context of the recent Corona crash, right? This is at the top of everybody's mind that's been in the market at any point this year. You know, we're in this nice 10-year long bull market. Everyone's overly optimistic. They have FOMO. They don't want to miss out on future profits. But as volatility contracts, we see the Bollinger Bands are very close together. Price starts to hug the lower band. This is the beginning of the slingshot setup. This is where we need to have a contrarian approach. Everyone else is greedy. We're starting to get fearful. And so what we want to do is we wait for this crash to occur. This is where everyone's greed shifts to fear and people start to panic and lose money. This is where we want to start getting greedy, okay? And this is where we come in and buy. And what happens? The slingshot's released and the band returns right back to the point where the market sell-off began. That is what the slingshot setup looks like, okay? And everybody wonders, how can we be back in this, at these price levels in this type of a situation? It's because it really has nothing to do with fundamentals. It has everything to do with what really drives the market, and that's fear and greed. And I'll say that again. What really drives the markets and price action in the market is fear and greed, not necessarily fundamentals. Fundamentals can have brief effects on price action, but ultimately it's fear and greed and the psychology curve that I showed you at the beginning of our session that drives behavior in the market. And that's why we can be back up at price levels that we were at before the Corona crash. All right, let's look at more examples. I often get asked, well, okay, great, Jeff, that's you know, an example of a market index. What about individual stocks? Well, here's a chart of Apple. This is the daily chart. And you can see on the left side of the chart, we have the bull run, right? The stock's in a nice uptrend. But here's the slingshot starting to set up. Price is starting to hug that lower band. The stock tanks. Rather than being fearful, we get greedy and come in and buy. And what happens? The shares return right back to the point where they broke that lower band. That's the slingshot. Here's another example of the QQQ daily chart. Okay, we have a volatility contraction on the left side of your chart. The bands are close together, but here's the start of the slingshot setup. Price starts to hug that lower band. The QQQ crashes. We come in and buy. It moves back up to the level where the band broke. Why does this happen, guys? Because the big players in the market the big hedge funds, the big institutions know this setup. Okay, they know this occurs. They take a contrarian approach. When everyone else is panicking and losing money, they come in and buy and drive the prices back up to where they once were before the panic set in. Okay, that's the slingshot. People often ask me, Jeff, does this work on intraday timeframes? I'm a day trader. Absolutely. The psychology takes place on any time frame in any market, guys. This is a 5-minute chart of advanced micro devices. We have a sideways ranging market with some volatility contraction. If you were trading that one of the Bollinger Band techniques I mentioned earlier, buying at the bottom band, selling at the top band, hey, that worked great for a few trades. You had, 3 or 4 nice successful trades there until this one would have wiped you out. Price didn't bounce off the lower band. It started to hug the lower band and trade down, and the thing crashed. But here's where we come in and buy. And what happens? Price goes right back up to where the band broke. 5-minute chart of AMD. So the trick is with this is, how do we identify the buy zone? How do we identify where to get in on this setup? It's pretty easy to spot, right? You can see when the band starts to break and move to the downside, but where do we get in? Well, there's a lot of different techniques. And unfortunately, we don't have time to get in all the nuances of the entry on our session today. But basically, I can give you a few ideas. So basically, things like dollar cost averaging in, because we don't necessarily know an exact bottom. We don't know exactly where the turnaround is going to be. We can use bullish candle reversals, like a bullish engulfing pattern or something of that nature to get back in on a reversal. We can look for price to trade back within the bands a certain number of periods. There's a lot of different ways we can do it. But really the trick is to identify when the band is overextended and ready to snap back. So the good news is I've made this a lot easier for you guys, and I've actually spent more than a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. So when is the price most likely to reverse off that lower band and go back up? And once I got the formula dialed in, I had to configure it to work on all time frames and duplicate the success across all markets. And I did it in an adaptable algorithmic formula that can actually reliably predict market trends in advance. And the result's a tool that actually provides accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move. And it doesn't just work for the rebound, it also works for the sell warning, okay? So it works both directions. And when you formulate the right combination of momentum indicators and combine them with the volatility studies and price action setups that I've programmed into this algorithm, you can accurately identify buy and sell signals at the outer bands, okay? This is really cool stuff. And I programmed this into a software called Trade Trend. So Trade Trend can give you accurate, excuse me, let me grab a drink of water real quick. Can give you accurate buy signals at the bottom of the band. And again, it can also give you an accurate sell signal before the slingshot trade sets up. And it does it with a proprietary blend of momentum indicators that can warn you of market sell-offs and rebounds with short-term and long-term accuracy. And it works with any security, stocks, ETFs, futures, Forex, on any time frame. You can use it to backtest to see the results before you place a trade. You can use it to supercharge your option strategies. We have a lot of members who use this to more accurately time their entries and exits for options trades. And you can use it to trade like a pro without any guesswork involved, because it tells you exactly where to get in, where to get out, and it gives you a trailing stop to lock in profits while the trade is open. Now, I told you I'd give you a little trick to help eliminate a lot of your losing trades. And we actually have this technique programmed into the trade trend algorithm, so you don't even have to guess where to enter your positions. In fact, it gives you the exact entry price and exit price, okay, down to the penny. But one technique that you can use with really any strategy is, rather than jump in with a limit order or market order when you get a buy signal from your current system, or even with the trade trend system, we use a buy stop or a sell stop order to confirm the momentum direction. So basically we use a buy stop order to enter a long trade, and we just place that above the high of the candle, the signal candle, and then a sell stop order below the low of the sell signal candle. And that will help filter out false signals, because it basically is looking for confirmation of the momentum continuation or reversal. And it really does improve consistency. In fact, I found it can eliminate 30 to 40% of my bad trades or my losing trades, and 30 to 40% of those false signals you get with really any indicator. And so we program this in the trade trend to give you an exact entry price using a buy stop or sell stop order. So really cool stuff. So people ask me all the time, well, Jeff, how does this work in real live trading? How did you do in the Corona crash? So I'm going to share my actual real TD Ameritrade real money brokerage account with you guys. And these are screenshots from my account statements from February and March. So right, February is when the crash started to happen. And I was being pretty cautious here. I was actually mostly in cash, only trading very small position sizes because I knew that things were getting volatile. I was watching the VIX, and I knew in the midst of this kind of the infancy of the COVID-19 pandemic that things could get pretty rough. So I was playing it safe, but I still made over $13,000 using the Trade Trends Signal software, okay? And then as things got really bad in March, this is a screenshot of my March TD Ameritrade brokerage statement, I started to load up a little bit more on my positions as the slingshot trade was setting up on my charts, and I made over $27,000 in March, okay? Mostly in cash though, okay? So I wasn't doing, trading any major position sizes here. But in that Corona crash, I made over $40,000 in real money, guys, using the trade trend signals with the slingshot setup, okay? So that's the power of this in real money terms. All right, so let me show you some more examples. This is what the trade trend signals look like. They give you a green or a red buy or sell warning. Now I mentioned what sets trade trend apart from other signal softwares out there is generally with a signal software, if you get a buy or a sell signal, you've got to really jump in right when you get the signal. And that's really the same as indicators as well. If you look at all the various indicators, dozens and dozens of them out there on today's retail trading platforms. Trade trend is different. It gives you 1 to 3 candles of advanced warning. So when we get a green arrow, we simply know that that's a warning that the chances are price is going to be going up. If we get a red sell warning, chances are price is going to be going down. And then if we get a green or red dot, that's the confirmation that the order or the exact entry price that Trade Trend gave us was triggered. Okay, and so this example of Bank of America, I pulled up some consecutive signals from Trade Trend using options trades. So if you just bought calls and puts on these signals, the result was over a 1,900% gain, turning every $2,000 into over $54,000. This is another example of Chipotle Mexican Grill, CMG. On these 4 buy signals that Trade Trend identified, it resulted in over 2,100% gain, turning over $2,000 into over $51,000 without any compounding. So Trade Trend works in any market, any time frame, in any size account, and it provides predictive buy and sell signals before the move occurs. Okay, that's the key, guys. Most stuff gives you a sell signal that you got to act on immediately, but Trade Trend does it up to 3 candles in advance. Okay, so you get that green buy arrow or red sell arrow up to 3 candles before the anticipated move. And it's predicted every market crash and rebound in the history of the market with 100% accuracy. Okay, and if you decide to check out Trade Trend, and I'll give you an opportunity to do that here in just a minute, you can go back and verify it for yourself because every arrow in confirmation is on the chart going back to the beginning of the markets, and you can verify every trade for yourself. So you may have seen other signal softwares out there, but I promise you not like this. So let's look at some more examples. I like to focus in on every trader and investor's biggest fear, the market crashes. So if you were trading about 5 years ago, this is the flash crash of August 2015. We're in a sideways trending market. This is the SPX, very obvious sideways ranging channel here with volatility contraction. And we get the sell signal from Trade Trend, okay? So a lot of traders are probably, range trading here, buying at the low, selling at the high, selling at the low, buying at the high. And that worked there for a little while until Trade Trend flashes the sell warning and the market crashes on August 19th. And it caught it right there near the top. It then gave us a nice buy warning before the market rebounded. All right, this is an example going back further, the 2008 mortgage crisis. This is another chart of the S&P 500. All right, and people are overly exuberant. This is that big housing bubble that we saw. Remember that trading psychology curve. This is where we should be fearful when other people are getting greedy. And sure enough, Trade Trend confirmed that. It gave us a sell warning telling us other people are being too greedy. Price action is telling us that there's a pending sell-off. The market crashes, loses more than half of its value, and then we get a nice buy signal before the market rebounds. Let's go back even further. Over 20 years ago to the 2000 dot-com bubble. Same thing. Everybody's overly exuberant, euphoric. They have FOMO. They don't want to miss out on future profits. they're buying. Unfortunately, they get caught, they get squeezed, trade trend flashes the sell warning, the market crashes, and then we get a buy warning from trade trend before the rebound. So guys, virtually every system will produce winning trades, okay? And they'll also produce losing trades, okay? If you trade long enough, you're gonna have a winner and you're gonna have a loser. The problem is that most systems or softwares out there don't keep you out of the market when conditions are not favorable. They just tell you to do something. They give you some rules, but they don't necessarily keep you safe when things are not favorable. And you end up giving a lot of your profits back on the losing trades. How many guys have experienced that out there? I know that I have, okay, until I figured out how to stay out of the market when conditions are not favorable, all right? Here's real money proof of that, guys. These are actual screenshots from my live TD Ameritrade brokerage account using the trade trend signal software in the futures market. I also trade futures. And it allowed me to make over $8,000 profit on a single day, just trading one contract per position, over $6,500 profit in a single day, over $6,000 profit in a single day, and over $5,400 profit in a single day. These are real money results, guys. They're not hypothetical. So my promise to you is I want to help you have days just like these, and I'm going to give you access to a tool that lets you copy my trades. So this is a one-time opportunity just for InvestorExpos to join me to discover how I make consistent income in the markets day after day and week after week. And I reveal every one of my special techniques and indicators that make profits like this possible with absolutely nothing held back. All right, so here's everything you get. 12 months of trade trend for stocks, futures, and Forex. You get exact entry and exit signals. You get live interactive trade sessions. We hold those several times a month. If you're not able to attend, no worries. We post all the recordings in our members area. And we also give you full support and personal coaching. I hold the trading sessions, so you can ask me questions directly. We also teach trade adjustments to fix losing options trades. And I also give you some of my most profitable tickers that I'm currently trading. All right. So ultimately with trade trend, you get to cut the learning curve and trade like a pro starting as early as tomorrow with our InvestorExpos Trader Special Package. So again, you get the 12 months of trade trend signals. That's a $1,499 value if you were to go subscribe on our website for an annual subscription. You're also going to get our live trade sessions. Those alone are $550. You also get the personal coaching from me. So you can ask me questions directly and attend the sessions that I actually hold myself. And that's a $1,997 value. We'll also give you access to our invitation-only Facebook group where we have nearly 1,000 members who trade our strategies and use trade trend themselves, so you can interact with other traders who are in your shoes through our Facebook group. That's a $199 value. And we also teach you all of our trade adjustment techniques we have in our arsenal to fix losing options trades. That's a $900 value. But ultimately, our goal is to help you to learn trade stocks, futures, Forex, options, whatever market you want to trade with consistency, and that's really priceless. And then I'm going to throw in a couple bonuses if you guys decide to check out the InvestorExpos Trader Special today. Number one is my online course, How to Win 97% of Your Options Trades. We sell this for $595. I'm throwing it in for free. And then I'm also going to throw in How to Create Risk-Free Trades. This is my new ebook where I show you one of my strategies to mitigate risk or even eliminate it completely in a trade and still allow yourself to make profit, the opportunity to make profits. That's a $97 value, okay? So if you add up all this and you bought it at our retail price, the total value is over $5,000. We're going to give you a really special deal today that's just for the InvestorExpos event, and we're going to slash this price and take 80% off at only $997. So you get everything you see here on your screen for only $997. All right, we are going to limit this to only 15 seats, okay? And we limit it because I do give you guys my personal time as part of this package, and I can only do that with so many people, okay? Hopefully you realize that. So we do limit this to 15 seats. We have hundreds of people on the session with us today, so they're going to fill up fast. So I'm going to tell you here in a second how you can get into this package and claim one of your 15 seats. And that's by going to tradetrendnow.com, tradetrendnow.com, and you can immediately claim one of your 15 seats and also get the 2 bonuses you see on your screen. Now, if I have a little extra time, I'll try to answer some questions here in a second. One of the common questions I get, so I'll just kind of get this out of the way first, is what platforms is Trade Trend available on? Well, we have a lot of options to access the Trade Trend signals. We have it on web-based charts like Wealth Charts, TradingView. We also have it on software-based charts like Metastock. So If it's not available on your broker platform, generally what people do is they'll get the signals on a web-based chart or a software charting platform like TradingView, Metastock, Wealth Charts. And remember, it gives you the signals in advance. So you have plenty of time to then go into your broker, like if you're trading with E-Trade or Schwab or something, and enter your orders because it gives you the exact entry price. Now, if you want it on a broker platform, we do have it on NinjaTrader, Thinkorswim, and TradeStation as well. So when you go to sign up at tradetrendnow.com, you'll get to select which platform you want your trade trend signals on, okay? Now, I'll try to get to Q&A here in just a sec. I want to share some testimonials of some of our trade trend users, okay? So you guys know what other people that were in your shoes are experiencing with the trade trend software. So Jay Thomas says, very impressive results. Well done. Thanks for helping us little guys with small accounts who dream of growing our accounts over time and reaping the benefits of consistent monthly income. Our Julian just sent me this one a couple weeks ago. He started to use the trade trend indicator. He said, wow, this is an excellent indicator. So far, I've made over $11,000. One of the most powerful indicators I've used, and I use this indicator for my Great British Pound pairs on Forex and Bitcoin. I recommend this indicator for anyone who is serious about winning trades and making consistent money. Frank says, how refreshing to have someone produce a product that actually does what it says. I thought it was too good to be true at first, but you've proven me wrong. And this is one of my favorite testimonials I got from Brian a couple months ago, because I know Brian was really struggling in the markets last year. And in fact, he said at one point he was down around $42,000, but he wrote in and sent me a personal email. And he said, I'm now happy to report that I have recouped all those losses and I'm now net positive over $47,000 on trade trend trades. The system's generated almost $90,000 of profits for him in the past 90 days. How incredible is that? All right, he says the system itself would have actually generated higher returns if not for mistakes on his part, but he's thankful to the good Lord for leading him to our system. And Alan was one of our early beta testers of TradeTrend. He says, I've been involved with lots of software testing. TradeTrend does exactly as it says, and I've found some nice setups. Guys, it only takes one trade, as you've seen from my real money brokerage accounts, to pay for this package, okay? Buying low and selling highest prices. And I've shown you guys how to do that with the slingshot setup. And when you combine that slingshot setup with the trade trend signals, you're unstoppable. Go to tradetrendnow.com to claim one of the 15 seats. And I'm going to throw in a guarantee. If you don't make money in the first 90 days, I'm going to give you an extra year of trade trend at no cost. On the house, no cost. Okay, guys, that's how confident I am in this. I want you to be successful, and I'm here to make sure that you get there. So I'll go ahead and open it up to Q&A. We don't have a whole lot of time left, but I'll spend a few minutes answering questions. If there are any questions, feel free to type those into the chat box. And let me see, let me get the chat box pulled up here. And then if I don't get to any questions, go ahead and feel free to email us anytime at support@altostrading.com, and I'll be happy to answer this for you. So I'll get to some questions here, and then I'll get the page with everything that's included in our package back up on the screen. Yeah, Gian says, freak, yeah, all right. Gerald saying, so if your software gives us a buy signal, sorry, let me expand this. These questions are flying by so fast I can barely see them. Can I also buy a call option? Yeah, absolutely, Gerald. In fact, that's what we go over in our live trade sessions. We go over strategies, like different option strategies to use with the trade trend signal. So like one session we might cover credit spreads, another we might do iron condors, another we might just be buying calls or puts. So you actually get immediate access to our members area to watch over 30 hours of recorded content of all the different option strategies we've taught to implement with the with Trade Trend. Larry says, would like to review Trade Trend and Traders World magazine. Absolutely, Larry would be happy to do that. Okay, Vincent said, is it a signal service or do you teach traders how to use it? Good question, Vincent. Both. So it allows you to select your own trades on your charting platform. So it gives you the buy or sell warning. But we don't just leave you there and leave you hanging. We give you all the initial training, which is actually a 4-step process. It's a video you'll get when you join that shows you 4 simple steps of how to use the signals. And then again, we have over 30 hours of recorded content in our members area where you can watch us use it in action in the markets. And then you'll also have the opportunities you see on your screen there to attend all of our live sessions going forward. Someone named Trader is asking, what parameters do you set at the Bollinger Bands? I just use the default parameters. It's a 20-period moving average in the center band, and then 2 standard deviation on the upper and lower band. John's asking, do you own the indicator once purchased, or do you have to pay a renewal each year? A good question, John. So the 997 is the lifetime Investor Expo Trader Special package. So everything you see on your screen, you get for life. But the trade trend signals are a subscription. So you get 12 months of that included at no additional cost. If you decide after the 12 months you want to renew the signals, so remember, you get all the training, all the education, everything else, all the live sessions for life. If you want to renew the signals after the 12 months, and you decide that, you know, hey, these are working so well for me, I might as well just hang on to them, then you're grandfathered in at the 997. You'll never pay the annual $14.99 as long as you're a member. Henry asked, does it only work for market crashes? Absolutely not, Henry. Trade Trend actually looks for momentum reversals or shifts and momentum continuations. So it works in bull markets, it works in bear markets, it works in sideways markets, and it gives you both buy and sell signals. Okay. So I'm kind of out of time here, guys. There's questions are flying through faster than I can answer them. I tried to get to the ones that I could see. And if you have any more, again, you can email us. But we are almost filled up on the 15 seats. So if you're thinking of joining, we are going to shut it down. We can't take anybody else after those are filled up. I would urge you to go ahead and take advantage of that, tradetrendnow.com. And again, shoot us an email if I didn't get to your question. Thanks everybody for joining, really appreciate it. Welcome to everybody who's joined the Trade Trend Signal package so far. Really excited to start working with you, and I'll pass it back over to Anna.
Today, I'm going to talk about leveraging the tech trend. As we've all seen, tech has basically been the big benefactor of COVID, sort of. I mean, I think back in March, everybody would have been surprised by that. Today, there's clearly a rush into tech, a rush particularly into that tech that is, you know, able to work remotely or actually benefits from those that are working remotely. So before I get started, just got to do my disclosures. The lawyers tell me I always have to do this. So all services and content are provided for educational and information purposes only and are not intended as legal or financial advice. Let me give you all just a few moments to read through this and make sure you understand fully that nothing I'm doing is legal or financial advice. All right. With that in mind, let's go to the good stuff. First off, me. I'm Keith Harwood. For those of you that don't know me, I started my career in the option pits of the CBOE. So back in 2005, I graduated from Notre Dame with a degree in theoretical mathematics and economics. I leveraged that into a position as a market maker on the CBOE floor. So, you know, for those of you that have seen the floor, if you ever seen like Trading Places, at the very end, you got Eddie Murray and Dan Aykroyd down on the floor. They're yelling, they're making all those trades. That was me. Fortunately, as I got in there, instead of kind of having to elbow your way around, I was mostly doing my stuff with computers, which is kind of more my thing anyway, because I'm more of an analytical guy as opposed to just shoving guys out of the way and yelling, I want that trade instead of you, with, you know, no necessarily knowledge of the value of the trade. My focus was on the value of each of these trades and then still capturing the bid-ask spread. Traded through the subprime crisis, a crazy time in the markets, made some really crazy moves, and that was really a great time to be a market maker, particularly on the electronic side. I moved off floor because most of the volume was transitioning to electronic, which it still is now, outside of a few products that are still fairly driven by the pits, you know, like the VIX and the big S&P contracts. You've got some big order flow that goes through there for those larger hedge funds. That doesn't necessarily apply to most of us on this chat. I think most of us here would be categorized as people that are looking for electronic execution. You know, you throw in an order through your online brokerage. It goes fully electronically to a market maker that is supposed to either a bid or an ask electronically, probably dominated by some of those high frequency trading firms. They're just looking to capture thousands of pennies, millions of pennies every day. And we as retail traders are looking for smaller numbers, of course, of bigger wins. So as these markets transitioned into that electronic market flow, I actually realized that the edge for the market maker was really going towards those guys that were just PhDs in computer science and could program the trading the market making tools that could move the fastest to try to capture that penny. And that's not what I was interested in. What I was interested in is those bigger wins, longer term trades, not holding for seconds, but holding for at least days, weeks, months. And so I started my MBA at the University of Chicago, graduated with honors, with focus on analytical finance, econometrics and statistics, and of course, entrepreneurship since I started my own business. After that, I went and worked for a hedge fund for a few years, learned a lot about technical trading because I figured if I could combine my intense knowledge of options with a really good knowledge of technicals, then I have two edges on the market and I can really start to create real leverage in the market. One of the things we always said at the fund was that if you have one edge, you could size something small, but if you have two edges, you're not doing double the size. You've got two edges. You've got a much greater chance of having success, and you can do 10 times the size with much greater confidence that you are going to turn it into a winning trade. Once I learned from them a lot more about the technical trading, particularly in commodities, but also noticing that it applied fully, of course, to equities as well, because there's so much computer trading, I decided that I wanted to get away from the hedge fund world. It just wasn't a rewarding experience, even though I was, trying to teach new traders, hedge fund managers, and everything else about options and everything else. It just wasn't what I wanted to do. I wanted to work for myself, and I wanted to help people that I saw making bad mistakes in the market. I don't like it when people make bad mistakes in the market, because while a hedge fund manager can probably withstand a $100,000 loss in his own personal account on a day or a week, when you see somebody do that in their 401k or something because they didn't understand options or didn't understand the risk, that just irked me. And I thought that there was just a need for greater understanding of options, greater understanding of how the institutions, the market makers, and everybody else makes money in these markets in order to make this a better, a more equal playing field. So that's why I started Trade Academy. That's why I joined Option Hotline. That's why I'm here today to talk to you guys about one of the particular programs that I do. It's a trend trading, as you might have guessed from the title. It's focused on tech stocks, as you might have guessed from the title. And it's really actually quite successful. And I want to make sure that you guys understand how it works. I'm going to tell you exactly how the entry works. And then you guys can decide if you want to just try to implement it yourself or work with me more on just really adding to your education here. If you have to leave early, as I know many people do, we're all working at home. Well, most of us, I guess. Maybe some of you have actually gotten to get into an office or another work environment. You can feel free to email me, Keith@optionhotline.com. I'm happy to answer questions. If you miss something, you can actually call me. Not a lot of guys do this. I'm giving you my phone number, 312-600-8004. Call me. If I don't answer, leave a message. I will call you back. I do want to make sure that everybody gets all their questions answered here. And then for those that miss it or not, if for those that do come through, there's going to be a free giveaway. We're going to email it. Webinars@optionhotline.com will be the from address. So make sure you check your spam filters just in case. But that's where you're going to get your email from with a free giveaway. And again, email me if you have questions or comments. Now, with that in mind, I'm just going to kind of go straight to the end here, and then we'll come back and talk about the whole thing. So for trending stocks we found from our proprietary signal, there's incredible leverage from using the option market. This is from the beginning of this year. So we had a major crash in March, and yes, we did have a drawdown in our signal as a result. But coming out of that, that's where we've seen incredible leverage. A $20,000 theoretical account from our model portfolio would be up over 100% through the end of July. So that's 7 months, over 100%. Everything I do on this program is built on a $20,000 account. It can be applied to other sizes. It can be scaled up, scaled down. That is the beauty of trading, particularly with options. Not everybody is going to want to trade, Google or Amazon, even Apple at close to $400 a share. There's a lot of money required to do those. The options make everything accessible because they help to neutralize some of that increased cost. Of course, most are going to struggle even with options in Amazon. But there's a lot of ways to leverage these $100, $200 stocks without having to use as much capital. So that's what we do with Option Trend Trader. I'm looking for names that are trending, and then I add my options knowledge to add leverage. And you can see that the proof is in the pudding. That's the results. Those are the monthly net totals. Unfortunately, it's before your fees. There's not a ton, we're not talking about constantly trading. These are long-term holding positions, but it is before fees because everybody's are different. At the end of the day, that's what you're looking for, I think, when you're looking for a trend trading portfolio with leverage. So what I want to discuss today is COVID-19, because that's, of course, on everybody's mind. Are we going into a second wave? Is that going to shut down the economy again? Are we literally going to repeat March in the markets as a result? Or has everybody kind of got their head around what's happening? Have we turned a corner on COVID? Yes or no, who knows? And are we just going to continue to march higher the way the market has so far? There has been a spike in cases. So why is everything going up? Let's look at some charts and try to think through what's going on. I'm going to show you what moving average signal I use to identify my trend. So right now I'm giving you away my entry signal. The program helps get you the exit signal and a lot of other trade management, but I'm giving away the entry signal on this conversation right now. So you guys are getting the entry signal. Congratulations. You've got one step of a trade system. I don't necessarily recommend using any system without a full system, but at a minimum, you've got the starting point and you can start to see why it works. Then why I use options, that's leverage. That's where our leverage comes in. Why the volatility matters for this particular system. Volatility matters a ton when you're dealing with out of the money options. It matters a little less when you're doing at the money options, and it matters the least when you're doing using further in the money options. I'll explain why and how do I incorporate volatility when executing this trade. I'm giving you guys a lot here, so I hope you guys are are keyed in, ready to concentrate. And frankly, if anything goes over your head or it seems like it's missed, feel free to throw questions in the questions box or the chat box, and I will get to them as I can. Okay. If I don't answer immediately and I get to the end and I still haven't answered, feel free to type it again. I don't want to miss anybody here. But yeah, I think in the questions box is the best place to do it. So let's start with COVID. Honestly, a couple months ago, I thought we were turning the corner. Total cases continue to rise. This is the global picture. South America has been hit pretty hard. Brazil has started to come up. Obviously, the United States continues to see cases. I'm not going to put in my personal opinion on COVID here, whether I am negative about it or positive about it. I just want to look at the data and recognize that this is one of the big drivers, if not the big driver of everything right now. Everybody wonders how this will impact earnings. We're going through earnings season right now. Tech companies have done pretty well through earnings. Microsoft didn't necessarily look great on their earnings announcement a couple of weeks ago. Google was a little negative on Thursday, but Apple, Facebook, and Amazon all seem to do well. Maybe not a surprise on Amazon just because they're on, they're at-home delivery and people are, ordering more rather than going out to the stores, and a lot more web-based stuff because they have their web services. One thing I normally, when I'm looking at COVID, I just look at the daily cases to see if we can find that plateau. So as we went through May and into June, kind of looked like we had stalled. Remember the whole narrative back in March was that we wanted to flatten the curve, and it looked like we had done it. And then as we got into the middle of June and into July, there was just this extra increase. That's not necessarily what we are looking for to help the economy grow. At the same time, I think that it's important that we look at the not net, I mean, the major end result of COVID that nobody wants to have, and that's deaths. So with the increase, the deaths have been, fairly flat. It's not completely flat. It's starting to increase a bit here. Maybe it'll go higher. I'm not sure. I don't try to apply technical analysis to any of this stuff because these are models that are better suited to the medical professionals. I am relieved, to say the least, that the death count hasn't increased along with the case count. You can take whatever else you want from that, but that may, so if I am the CDC or a government official, I'm worried about this number, and I'm less worried about the trend in this number. I'd like to see both of them decreasing because that shows that everything is going well. But if I don't see this decreasing in particular, because the value of human life is, it's uncalculable. People will try to do it for legal cases and everything else, but I never want to see anybody pass away from this disease. But if you're getting cases that people are ultimately recovering from, that at least gives me hope that people have a stronger response to this. If I go straight to the US only, you can see here that the United States is also having an increase in cases down here. We've had huge numbers coming up in Los Angeles, Miami, Arizona, Chicago, where I am, is still there at number 4. We were number 1, now we were number 4. It's not really something that I wanted other cities to pass us on. Technically New York was probably number 1 because they had so many counties here, but at the end of the day, none of this is necessarily what we want to see. It's what happens next to the world. And we had a major spike. So, I for one can say I looked in May and June and thought that maybe this was over. And I was really optimistic about that, and then we had this spike and it started to create a little bit of pessimism. But again, at least we're not hitting our peak daily death counts. These are, just terrible things to have to think about and have to count out and have to analyze. But at least things don't seem to be as bad as they were, even though in other metrics they're worse than they were. Sick people, if they're recovering in a couple of weeks or even a couple of months, I can tolerate. When I see people dying every day, it just makes me really sad. And when I see these statistics, it does the same. So now that we've moved through the fundamental driver, let's just talk about the markets themselves and the technicals and what's going on. So let's look at the S&P 500. The S&P 500 is, of course, at recent highs. It's almost to the February highs. We are, we're basically continuing higher. Why? Because there's stimulus coming from the government. There's, actions by the Federal Reserve. All this stuff is helping to promote business growth by offering cheap lending. We've talked about the story before. Back, 2008, 2009, during the subprime crisis, interest rates were not 0%, and people were not just getting their stimulus checks and their weekly unemployment benefits to the extreme that we're getting right now. And what we're doing right now is trying to give everybody a chance to continue to survive. But at the same point, because you can't go house by house and check every single person and say, do you need $600 to buy food this week? Yes. Okay, I'll give you $600. Do you need 600? You only need 300? Okay, I'll give you 300. We're not doing that. We're just saying the best we can do when we're trying to create a blanket system is to give everybody roughly the same, depending upon some, income parameters and everything else, and hoping that that helps keep most people solvent while they wait for the economy to return to normal. In the process, we've also reduced the cost of lending money. So if you tell me that I can have money for free, I don't have to pay interest on it, and I can go buy stuff. And I can go buy stuff that I think will be worth more in 10 years, and I don't have to pay you any interest from now till 10 years. If I have spare capital, I'm going to use it. And that's what people are doing. People are going out and saying, the long-term trend on the stock market is up. Normally companies do well. I can go diversified by just buying SPY or tech, which is a little easier to explain, or even some of those things that are undervalued right now, and just see what happens. Because I think that money is going to grow. It might grow actually at a faster rate than the normal, 8 or 9% of the stock market, because they're trying to do everything they can to keep business operational. Some businesses will go under. It's really an unfortunate situation here, but it doesn't mean the stock market goes under. That's how we build this trend. I have a number of signals that I use when I look at this. I've got, the open, the high, the low, the close, the change, bunch of moving averages. I'm really going to focus on the moving averages with you guys today as a signal for what I do. Bollinger's, which I look at for overbought, oversold conditions. I don't have time to get into that today. That's stuff that I can do with you guys later. This trend spotter is sort of the same idea. RSI, same idea, and MACD is same idea. These are all things that I use for managing positions. So what I'm doing today is giving you my entry, which is built on moving averages. Small caps tend to have recently tended to underperform. Why? Banks are a big part of them. Banks just haven't done much because interest rates are so low. Energy has struggled a bit because oil is so low. And when you're shutting down those aspects of the economy that have been shut down, it seems to create a little less demand for oil and energy because people are working from home and not necessarily doing big capex expansion globally and everything else. So small caps have been kind of the laggard here, but everybody kind of knows that. And of course, the easy one, you just buy it and and you just try not to blink, is tech. So look at tech here. It's just been basically a straight line up since March 23rd lows. So on March 23rd, we hit our lows, we bounced, we started to do a little chop, but it's been this long trend channel. I mean, this has just been absolutely magnificent. I'm going to draw on here. We'll do a arrow, and I'm going to tell you right now. Oops, that just does it that way. I don't like the version here. We'll do a pen. Yeah, you can just see. Oops. Well, okay, my pen is worse than the moving averages that are on there. But at the end of the day, what we're dealing with is just this long trend up here. It's just going higher. It looks great. There's nothing wrong with tech. And why? Because tech is effectively a computer-based industry. You think about what people do in Apple. They're sitting on their computers, they're programming, they're designing, they're doing all this stuff that they can probably do from home. When you think about energies, going to oil rigs, going to other, you have to go to places. Retail requires you, other than Amazon, to go into, Macy's. It requires you to go into Walmart. It requires you to go into these facilities that people are worried about exposure, and so they turn their retail purchases towards the online distribution, which is good if you have been able to adjust and bad if you haven't. And we'll see continued bankruptcies. JCPenney didn't make it. I hope that, Nordstrom, Macy's, all these other guys can. Saks Fifth Avenue, people may be pulling back a little bit of their spending, so they go from the opulent to the norm. And that's what changes retail. And tech just doesn't have that exposure. In addition, tech requires people now to be buying new computers for the houses, using companies like Citrix Systems in order to do multiple monitors. All this stuff is actually really positive for tech, and that's why that trend is there. And that's why I look at the individual companies within the NASDAQ 100 in order to find those companies that are tech-based that should continue to perform higher with the momentum that we've got, and even more so, outperform the tech index. Because I'm not picking all 100 of the NASDAQ 100. I'm picking the best ones. That ranges from 10, maybe 15, 20, 25 names. 25 is a lot. That means like everything looks great. There's nothing I have to worry about. Right now, I think we have 15-ish names that out of the 100 that I think from the charts, not from my fundamental view, from the charts continue to go higher. My analysis says, trust in this system, trust in these signals, and I will make money. And so let's talk about systematic trading, because that's really what this is about. I'm going to bring up all the bullet points here so you go, oops, I went one too far. All right, systematic trend following trading systems tend to be more rules based than other types of trades. What does that mean? Trend following trading systems require a rule for entry and a rule for exit, a statistical number, a number that says I have to buy here, and a number that says now I have to get out. If you have that, you eliminate the emotion of trading. I don't go out to the market and say, gosh, I really think Ford is underpriced here. I'm going to buy it today for no apparent reason other than the fact that I think Ford is underpriced. Why don't I do that? Because I'm not going to spend hours, days, weeks analyzing all of the financial documents that Ford puts out to figure out why Ford is a better stock than Amazon. It's just not going to happen. The amount of time and effort put into that is better suited to those fundamental analysts that are at these hedge funds, that are at these investment banks, and they can figure out that stuff a heck of a lot better than I can. What I can do is I can use a combination of computers and my own experience to find trends in rapid fashion. I can look at hundreds of stocks, hundreds of charts, in a single day and come up with my short list of 10 or 15 or 20 companies that I want to look at for the day. The guy that's doing the fundamental analysis, he's not changing which 10, 15, 20 companies he's looking at every day. He is looking at a specific sector every day for his entire year, trying to build up a great knowledge of that. And I applaud him for it because he can figure out which one is the winner and which one's the loser. And when he figures out which one the winner is, he starts buying that stock, pushing it higher relative to its peers. And, within a couple of days of him starting that process, I want to have a technical signal that says, yeah, I'll do the same. So I basically piggyback his work. That's what technical trading is, piggybacking somebody else's work, using the information in the market and taking advantage of it. Now, to be a fully systematic trade, we need to find rule for entry, which we're giving you today, and the exit of the trade. The exit, we're going to have more conversations. I don't have time to give you the full thing, and frankly, I would probably be a fool to give you all of this for free, unfortunately. Now, we're going to give you a big discount because I want you guys all to succeed, but I want to make sure that we all get that information. Now, once I start incorporating options positions, that's where things get a bit more discretionary. So for me, I'm comfortable using my discretion on both technicals and options, but for this particular system, the main element of my discretion is based upon options. I delay an entry using my discretion because of a concern, whether it's a fundamental input about to come out or something else that just doesn't necessarily line up. I occasionally delay an exit, but most of my trades are very built upon the systematic and then using my years of experience to add a bit of discretion to add a little bit of alpha. And that's our goal, generating alpha, of course. So let's just get to the meat of it. The simple moving average is the key. So simple moving averages take the average closing price over a recent period. So for those of you that aren't familiar with simple moving averages, I'm just going to give you a quick and easy way to understand it. A 10-day moving average takes the average of the closing price for the last 10 days, which is 10 trading days, which is 2 weeks. Okay, so if every day of the last 2 weeks, the Q's closed at, or S&P closed at 230 bucks, then the 10-day moving average is simply 230. If 9 days it closed at 230 and on the 10th day it closed at 231, the simple moving average is $230.10. Okay. If you have an upward ascending moving average, what does that really mean? If the slope of the moving average is increasing, if it's going higher, if it's positive, it means that 11 days ago, the stock market was lower than where it is today. It means today's closing price is higher than 11 days ago on a 10-day moving average. So it means that the person that bought the stock market 2 weeks ago is up money today. And if, as they often do, a hedge fund is allocating to a position, you know what they do? They push prices higher because if they think that stock can go up 10%, in the process of executing their trade, they might push it up 2%. Or if they think the stock can go up 100%, they might push it up 8%. You get an increase in prices because they are a buyer and there's probably a lack of sellers, unless they're just bad at what they do. And if they're bad at what they do and a bunch of hedge funds are selling into their buying, then the price will go lower and they might get washed out of the world. Or if they're good at what they do, they might get lucky and say, hey, this is great. Other people don't see the value here. They're selling into my buying and I make more money. The key here is trying to find those names that everybody wants to buy, nobody wants to sell, because that's how the market keeps going higher or the stock keeps going higher. All right. So as I see stocks trading above their 10-day moving average, above their 20-day moving average, above their 50-day moving average, 200-day moving average tells me that the current price is above the average entry price for everybody for nearly the last year. It's like 9.5 months. All those guys are making money. And anybody that was trying to sell into it is starting to regret it and maybe thinking about buying it. So guys that make money, they don't necessarily panic. Guys that are losing money, panic. That's or girls, late women, whatever. I don't want to be specific here. People that are making money tend to be confident, and maybe get complacent at times. And people that are losing money tend to panic and make mistakes. So what I want to find is are names that are going higher, that I can not be complacent, but I can ride the wave and continue to monitor every day and then get my exit before those guys panic the other way. If a stock's below a key moving average, it basically tells you that all the people that have been buying it are really getting hurt and they are struggling. You could think about it just for the last 2 weeks, the biggest mover has been precious metals. Anybody that's short gold right now is just kicking themselves. Anybody that's short silver is kicking themselves. And that creates some panic to the upside. But if the move starts to revert, then maybe at that point, finally, those that are short can start to calm back down. So I'm calm when I'm winning and I'm panicking when I'm losing. That's the nature of human psychology. Here's the moving averages for the tech sector. It's just a real simple chart. I can just give you the numbers here. Purple is the 10-day moving average. Green is the 20-day moving average. Blue is the 50-day moving average. Yellow is the 100-day moving average. And red is the 200-day moving average. So what do you see here? What you see is that anybody that's been buying at any time frame is making money. The current stock market is above yesterday's high. Well, 2 days ago's high. I think we were down a little bit this morning when I stopped looking at the market to focus on you guys. So 2 days ago, the market was a little bit lower than yesterday's high. So basically everybody in the short term is making money because we're at new all-time highs. We're also above the 10-day moving average. So the guy that's been buying for the last 2 weeks, he's making money in the tech sector. The guy that's been buying for the last 4 weeks, 20-day moving average, he's been making money all the way down to the 200-day moving average the last 9.5 months. That guy's up a ton of money. 219.67 is the 200-day moving average. If you bought a little bit every day for the last 200 days, you'd be up $38 on your investment here, which is over 25%. Oh, sorry, almost 25%. That's not too bad for 9.5 months. What do I actually use? So I use the 10, 20, 50, 100, and 200 on that chart because that's what a lot of people use when they're looking at charts. Here's where I do it. I look at the 22-day moving average, the 89-day moving average, the 148-day moving average. So the 22-day moving average is exactly 1 month of trading days. That's a 30-day moving average in terms of calendar days, 22 in terms of investing days. 89 is 4 times that. So we've got 1 month, we got 4 months, and we've got, 6.5 months. Okay. I'm trying to pair out 3 terms of traders. Those that are in the short term with the 1 month, those that are in the medium term, which is 4 months, and those that are in the long term, which are 6.5 months. You can go even further. This is how I do it for managing my positions because with options, time decay matters. So I use these 3 because of the fact that I'm using options. And if the 22-day moving average in purple is above the 89-day moving average in green, is above the 148-day moving average in blue, I generally want to be long. And when that doesn't occur, I don't. So for a long time, it was the case. And yes, you started to see some negativity on this. And you actually have a stop here that comes in well before these flips occur. That comes in before these flips occur for the individual names, because frankly, if I waited all the way to the low, I'd end up losing all my money with options leverage. But here, May was really the entry point, beginning of May. And now we've had this major run. We had a little bit of stagnation here at the end of June and beginning of July, and now we're running again. And all of this makes sense. If purple is above green is above blue, I'm happy. I can put this down to individual equities, or I can look at the whole index. But right now, I'm really it's hard to find a name in the NASDAQ 100 that doesn't have purple above green above blue. I mean, there are some, yeah, obviously, but there are a lot that have purple above green above blue and haven't been stopped out. As earnings come out and we start to see the COVID impact, that'll change for some, and frankly, that's great because that means that I don't just have to sit there and buy the index. I can really focus on stock picking. Back here in May, it was very stock picking focused. By the time June and July arrived, it was kind of like, oh, you could buy anything, but that's not where the leverage occurred. The leverage occurred in May. That's why you see this. In May, see that spike? for option trend trader. At the end of April, the account value is basically flat for the year, and by the end of May, it's up almost 75%. That's because May was the month. That's the month to invest when the transition is occurring for the index and the transition is occurring for the individual names. All right. Why does this work? Because options have risks and options have rewards. So the risks, of course, are the transaction costs. Options often have higher commissions and fees than stock trades. I do try to limit the volume as a result of this. Options have assignment risk. We're only doing long options in this program. Doesn't matter. If you're long the option, you don't have to worry about assignment. You exercise the right to buy the stock. The options decay in value over time. That's why I don't want to have a stagnant market. And volatility, of course, implied volatility has been all over the place. I'm going to come back to the VIX and show you guys that later because that is a huge impact on option pricing. For those of you that know options, this might be a refresher. Actually, I have this a little low on there, so you can't quite see the total text, but the idea here is that when you are long a stock, you have technically, risk down to $0. If I buy a stock for $100, I have $1,000 in my account. I'm buying 10 shares. The stock goes to 0. I lose $1,000. If I have $10,000 in my account, I'm buying 100 shares. The stock goes to 0. I'm losing 10 grand. Even if I think I want to be out of the stock, if it goes to $90, I don't know that I'm going to be executed. There is no defined risk technically because stocks gap all the time. Earnings, accounting fraud, etc. Takeovers, they can go to the other way. That's where the unlimited upside kicks in. When I do this with options, I have a flat line below my initial premium. If I pay $1,000 of premium to buy calls that expire in 1 month, I know I can only lose $1,000. If the stock goes to 0, I don't exercise my calls. I'm done. If I sell a put, I have the full risk to the downside with limited upside. Here I have limited risk to the downside, full reward to the upside. If I'm buying the $100 call that expires in 1 month, what does that mean? It means I can buy this stock for $100 any point between today and when they expire. So if today the stock's trading $100, I don't necessarily need to buy it. If in a week the stock's trading $125, I absolutely would love to buy the stock for $100. I don't have to. I don't have to use that capital. I can hold that position. I can change that position. I can roll that position. There's a lot of things I can do. I have options, pun intended. But if I pay $5 for that, it means that I have to see the stock above $105 before expiration just to break even. If it goes to $103, I lose money. I have to see leverage. I have to see a trend. I have to see something that tells me the stock's going to move. If it doesn't move for the next month, I'm out my $1,000. That's the difference here. The blue line is options. I love options. The purple line is stock. I don't like stock. If I think a stock's going to trade in this range, you can see the purple is better. If I think there's a chance it can go to 0, the blue's better. Probably don't want to be buying it if I think it's going to go to 0. But, nonetheless, if there's that outside chance, I've defined my risk. And if I think the stock can go to $120, if I buy these options for $5, I'm getting the right, but not the obligation, to buy 200 shares of stock because I can buy 2 of them for $5, each representing 100 shares, $1,000. Instead of buying just 100 shares. That's how I make my money, is getting my leverage on a move to 120. I can tell you, option trend trader, traditionally on those winners, we're looking for 6 times the leverage. So it's not 1.5x like we see here, it's 6 times the leverage of stock. A reminder, when I buy options, I don't use my whole account. Why? Because they expire. So I can blow out my account in a month if I buy these calls for $10,000 and the stock doesn't move. I wasn't wrong that the stock wouldn't go down. I was wrong that the stock would go up. I'm not risking my account on a stock being flat for a month. That's not smart. I set my risk based upon my downside, not my flat position. And I set my risk based upon my downside, not my upside. Yeah, it'd be great to make $30,000 to the upside. This is what I'm worried about. Down here, 90, 85 and below. That's the one thing I want to make sure you guys take away from this if you don't take anything else away. We already covered this. Just a reminder, assignment doesn't matter. Transaction costs, decay, and volatility do matter. We do need to be aware of it. Let's talk about volatility. That's the last one. Implied volatility matters. Implied volatility tends to mean revert. That means that if an option traditionally trades at 36% implied volatility and is currently traded at 42%, it's overpriced. Out of the money calls, huge difference in value versus in the money. Out of the money calls, I can find these great scenarios where they're on the clearance rack because the stock's not been moving and they're 28% lower than they should be. This system is based upon in the money calls. Why? Because I don't want to do as much implied volatility and options analysis. I want to focus on technical analysis. My edge here is focused on the technicals. So even if the option is a little bit overpriced, I think the technicals are in my favor and I can make this up off of my technical analysis. Other stuff, I need to make sure that I'm getting a cheap option in order to accentuate my technical analysis. This, even if implied volatility is high, I can make up for it with my technical trend. And now with the VIX where it is, yeah, it's at around 22, 23. It could go lower. You see back here, it was near 20. We've seen the VIX down in the low teens. So this back here was actually, sorry, that wasn't 20. This was about 15. We've seen lower than that even. Volatility could come down. That's my market maker perspective. If the market continues to go higher, traditionally when we have a bull market like this, implied volatility should be like 11 or 12%. It's just that people are aware of the downside potential risk because of what we saw recently, only 4 months ago, as crazy as it seems. Again, when I see implied volatility at lows, the out of the money options create that leverage. When I see implied volatility at fair value or highs, all options kind of perform the same to the upside. It's just a matter of how far higher we have to go before we start making money. When it's low, I can get huge leverage to the upside. When it's high, I'd rather do something more stock-like and use that capital to diversify more portfolio. So I'm looking at something more like the blue line because it just slightly underperforms stocks and I can add more positions, rather than the green line where if the market just goes a little bit higher and drifts, I'm going to lose money. So this is a fair market volatility situation. This is why I'm using implied options that are in the money. That's why my trade is, right there, 3 to 5 months to expiration, 65 to 80 delta, which means in the money calls after I find a triple moving average signal that works for me. So I gave you my triple moving average signal. I've actually now given you the entry on the options that I use. Something that expires in about 4 months, because usually these signals last for 4 months. Sometimes they go to 8 months. Sometimes they go to 12 months. I mean, we have positions that we've been rolling that have been close to a year old now, in spite of the pullback in March. When you have just a trending market for years, you basically never get out of them. You just always roll. If you want to find out more about the roll, you want to find out more about the exits, you want to find out more about the trade management, that's where you got to contact me. That's the rolling positions. That's the managing trades. I got 5 key technical indicators I use. They're really good. They're really helpful. And then, of course, if you guys have other questions about options in general, term structure, skew, open interest, unusual volume. I mean, I've worked as a market maker, as a hedge fund portfolio manager, as a trader for an even bigger hedge fund. All this stuff is just really interesting to me, and I'm always willing to talk. That's where you're going to email me. That's where you're going to call me. Again, watch for that free giveaway. And today, because you guys stayed through the whole thing, I want to make sure I explain to you how I can work for you and help you become a winning trader and generate these kind of returns and follow along with what we're looking at and learn how to trade the trends with leverage to generate a better return for yourself. And that's where you're going to go to optionhotline.com/store. And our option trend trader portfolio that had this result normally goes for $2,000 a year. I'm going to get you down to $997 a year. That includes a full course on everything with that trade management, with that roll management, with the exits. It talks even further about hedging, because hedging is crucial when you're doing leverage portfolios. All that's there. You're basically paying the cost of 5 months to get a year, because normal monthly is $197. That's my contact information. I'm going to pull up this one more time just to show you guys how this works, just so that you know, because I don't want to have questions about entry here. You go to Option Trend Trader here from Option Hotline Store. You hit Annual. You hit Add to Cart. Oops. You got to hit Add to Cart. I didn't do that right. and I go to the card. I have 2 of these. We'll go back to 1 because I assume that you don't want that. Coupon code's right there. Amazing year. Apply coupon. Quantity 1 probably makes more sense. And you can see that it quickly takes that $1,000 off. You get $997 as the price every year. You're grandfathered in. You're never going to have to pay the full price. Everybody else is going to have to. So congratulations to you at getting that major discount, 50% off of the annual, which is already about 2 months for free, just about 2 months for free every year. If you have any questions, throw them into the Q&A box right now. Throw them into the chat. I will answer as I can.
My name is David H. Smith. I've been working with David Morgan at the Morgan Report for almost 2 decades. This little picture shows me up in interior BC looking for a silver property. We came in on this little platform here, and then we had to kind of duck down and crawl along the floorboards to stay below the propellers. My topic is gold, silver, and miners demand tailwinds that are going to push this bull run to new all-time highs. A little bit of a disclaimer here. You're responsible for your own decision making. I don't give financial advice. I give suggestions and have you look over my shoulder. These are the assumptions of the presentation, that it's a 3rd inning of a once-in-a-lifetime bull run in gold, silver, and the miners, that there are proven strategies that can put you in the winner's circle over the next 2 to 5 years, that most investors will exit the market too soon and leave a lot of money on the table. Many more will wait around too long and give back everything they've accumulated. This tends to be the way it goes for bull runs. But if you have pre-planning, you can minimize the risk and maximize the gains against the above. And this is exactly what I'd like to help you do, along with your own knowledge base that you bring to this discussion. There are 2 things you cannot afford to lose: your investable money and your emotional capital. If your psychological capital is destroyed because you are emotionally wiped out in the market, it doesn't matter if you have a $5 million trading account, it will be worthless to help you earn and make money. So it's important to be bold, but at the same time, you need to be right. That's why you have to balance these 2 things out. The problem we're having today is probably unique in our lifetimes. We're not just trying to make money and limit risk in a bull market. We have a situation with the COVID-19 that's going around the world. It's changing everything, socially, politically, everything we do, the smallest things, and we're trying to function as though everything is normal in an abnormal market. And now we have this bull market, which is becoming very emotional as the public is discovering the metals and the miners, and we have to kind of keep all that in balance. And you and I are all in the same boat. The reality is, and if you read the book, The Fourth Turning, about how things change every 70 or 80 years in the United States, and we go through a great gate that can actually determine our existence as a nation, the last of which is World War II. When a new paradigm happens, that means there are new rules that are needed to move that paradigm and for us to be successful in it. The old rules do not work. So we're all discovering the new rules, not only about the health with COVID, but also investing in the metals and miners in this new paradigm. These are some survival tactics that will help you to not get blown out of the water. And the markets right now, while I'm talking, are as volatile as I've ever seen them in my lifetime. Gold has had several closes above 2,000, which had never happened before this week. Silver is just below $29, which wasn't supposed to happen until next year. And the Dow is still hanging in there. So we just have to kind of figure out what's going on, but not wait around for the answers. The market doesn't tell us the answers ahead of time. We have to kind of guess and apply our own skill sets in order to swim in that kind of a water. The market has been oversold for several weeks. I'm sorry, overbought. And it stayed overbought and it's kept going higher. So people that got out of the market because it was overbought I've left a lot of money on the table. Now that could change today, before the market closes, or it could go on for a couple more weeks. We do not know. That's why it's important to have a plan and to not go all in or all out at any time. Our book that David Morgan and I co-authored, Second Chance, How to Make and Keep Big Money from the Coming Gold and Silver Shockwave, which actually is in play right now, can help you not get blown out of the water, can help you make a great deal of money, and can help you keep most of it and not give it back as the bull market gets older, which is what most people do. We don't know of any other book that tackles it quite this way. What you want to do when you put all these things together is the Japanese phrase, misu no kokoro, mind like water. You can see this picture here that I took a couple of years ago at a nearby bay. The clouds are perfectly reflected in absolutely calm water. The sky looks like it's below you and above you. You can see the ground in the foreground here. And when you are calm and when you understand your plan and you're working your plan and you understand the rules, you can go into the market, which is a battlefield, and be calm and collected and think only of the cut when you make a decision either to come or go from a position in the market. Miyamoto Musashi was Japan's greatest swordsman, and he never lost a swords duel. It's about 65 or 70 that he had in his lifetime, and he was a master of his craft. This is what you want to become in your trading. You want to become unmoved by what's going on and flow effortlessly and seamlessly in carrying out your plan and minimize your emotions. We never get rid of the emotions, but we minimize them so that we're not reacting, but we're acting ideally a little bit ahead of time. Here's an interesting gold saucer market. It indicates 4,000 on gold. And you know what? We think that that could be halfway there. And could take place over the next 2, 3, 4, or 5 years. It could be a blow off that ends in 18 months. We just don't know. But if you play by your plan and you pay attention and you keep calm, you should be able to keep most of what you make and get out ahead of time and not give it all back by buying at the top and continue to hold everything that you have. You will have to accept risk. If you don't go into the market, you're accepting risk of inflation, of loss of other type of assets, and all sorts of things. If you do go in, you have to accept the risk of being in that market. There is no such thing as no risk. This is the most asymmetric trade I've ever seen in my life with silver. It's moved up quite a bit already, but we think it will go into 3 digits, which means that this move is just getting started. We could have a violent correction at any time. It might last a few days, it might last a few weeks, but it will not be the end of this bull market. And the key for you will be to not get shaken out, to not have trading in and out so that your funds dissipate. You will need to be careful about what you do and be careful getting in and getting out and stay calm. And if so, the efforts that you make can bring you rewards beyond what you can imagine today. We have this massive grinding of 2 plates against each other. The subduction zone is the plate grinding underneath the surface of the metal supply, and more tension builds up, and eventually there's an explosion, and that's exactly what's starting to take place now with massive demand for gold and silver, such that people are moving into the mining stocks because they can't find the physical. Silver production has been tailing for 4 straight years. You're going to see that yields per grams per ton have been dropping. New discoveries have not been being found. It's been taking longer to develop new projects. All of these things crunching against demand globally. This is the first time it's been worldwide demand, means that silver and both silver and gold are going to rocket higher into the future. Fresnillo is one of the world's largest silver mines, primary silver mines. You can see how their grades in grams per ton have declined steadily for the last decade, down to the point where they're down over half. Every ton of ore they dig out of the ground now has 1/2 the silver that it did 10 years ago. That affects the cost of doing it. That affects supply. It affects everything across the board. And Fresnillo is not alone. You can see the top 7 primary silver mines and how their average yield has also declined by over 50% in the last 10, 12, 15 years. And primary silver mines are relatively rare. There may not be 2 dozen in the world. Most silver, 2/3, comes from base metal production of copper, zinc, and lead. And so when the demand goes up, like it is now, you can't just ratchet up the silver production because you can only produce so much more copper, lead, and zinc at a given time to get more silver. And that's going to fall on the primary silver mines. The very few that there are, there may only be really 12 or 15 really powerful good ones. And people, the investors are going to be driven into that little tiny market trying to find and take positions in these primary silver mines. And they have startling potential going forward. Some of them have doubled and tripled, but they have the potential to go up another 5 or 10 or 15 or 20 times as this market gets into a situation where it eventually ends in a public mania with people lining up around the block to try to buy silver at coin shops and putting money in anything that says silver in it in the stock market position, which impossible to predict just how high these things are going to go. Great potential profit, great potential risk, very exciting opportunity if you're willing to accept that kind of a situation. Last November, silver jumped $5 overnight. Now, it didn't stay there, but the point is the fact that they could do that, even for a few minutes, is a harbinger of things to come. I believe before this bull run is over, we're going to see what I call a Bitcoin moment, where you remember a few years ago, Bitcoin shot up from about $900 a piece to less than 12 to 18 months later, 20,000 a piece. And we're going to find out that, in my view, this was not an outlier, and the $20,000 Bitcoin was not the all-time high by any means. It was simply the first cannon shot out of a battle that's going to take place that will carry Bitcoin potentially into 3, 4, maybe 5, maybe even 6 digits in the next few years. Meanwhile, we have the Asian silver vacuum cleaner with the SGE silver taking 25, 30, 40, 50 tons of silver delivery every week of physical silver off of the market, off the ability for other entities to purchase it. And by the way, China a decade ago was exporting 100 to 200 million ounces of silver a year. Today, they export none. They import hundreds of millions a year. That's how drastically this whole thing has changed. Last year, India demand took up 40% of the world's production of silver. Here you see the silver gold ratio, which has been as high as 125 to 1. I think it's now about 80 to 1. You can look at these different ratios for $10,000 gold and see where silver would be at that price. And let's say that you feel that $10,000 gold is way too optimistic. Let's call it $5,000 gold, which I think is, as the Canadians would say, is written in the rocks. So at $5,000 gold, take these figures and cut them in half, and you still get triple-digit prices for silver. It has a huge, huge upside potential. The physical, the mining shares, and eventually also the third leg of this, which are digital-backed silver on the blockchain. Here you have different ETFs around the world, and since this was put up a couple months ago, these numbers have continued to rise. All-time highs of deposit by shareholders buying into these ETFs, which then have to go into the market and back those new shares with gold and silver, and these continue to rise. And the spark, iskra, which is the Russian term for spark, that spark is now being lit under a powder keg of dynamite as people around the world try to get silver and gold physically and buy it. And in the United States and Canada is just 2 examples. I know people who have been in this business for 40 years. They all say they've never seen anything like it. In Canada, if you try to buy a tube of about 20 or 25 silver, Canadian silver maple leafs, you could wait a month for that tube. So this is really amazing. The US Mint, for the first time ever, has said we can only make silver or gold eagles at one time, not them both. And so we have to decide where that demand is. And right now they're concentrating on the silver eagles. So it's going to get more and more tense as the pipeline gets more and more constricted. Here's gold demand in the ETF cumulative change. That's the bottom maroon color on the bottom. But look at the top gold chart. That is the amount of actual gold that is coming out of the physical market, going heaven knows where, going into Swiss vaults, going into holes in the ground, going into socks in people's homes, going into PVC pipes in the backyard. A lot of gold that is unreported in the ETFs is being sucked out of the supply pipeline by individuals, by large hedge funds, by wealthy individuals. Here we have the massive breakout of the stocks, the gold and silver stocks versus the metal. Now, for many, many years, going in some cases back to the 1960s, gold has outperformed the mining stocks most of that time. That is changing now, which means that you, someone who may choose after you get some physical metal to participate in the mining stocks, the potential for the time that you spend when and if you get it right on a particular company or a portfolio will reward you all out of proportion to what you may have done even in the bull run from 2000 to 2011. So this is really a target-rich environment. There are many stocks that are worthy of your consideration. Choose wisely, and you could be shocked at how much you make based upon the effort that you put in and the money that you risk. You don't have to take out a second mortgage in order to turn in a double-digit account into a 3, 4, 5, or even 6-digit account over the next few years. You just have to be wise, keep calm, follow some basic rules, be humble, and do a few things that we discuss here, which will put the odds massively in your favor. So this is the first of 3 tailwinds I'm going to discuss about investing in mining stocks. Here you see the gap. This is another tailwind. Usually the gap between the large and small miners is pretty close, as you can see. And down in 2012 and 2013, they were equal. They tracked each other exactly. But look at the gap that's going on now. It means that mining stocks, the juniors, are massively undervalued in relation to the seniors. A senior is not going to go up 5 times probably, but a junior might go up 10 times in terms of the relationship of the price to the junior and the senior. So folks, have some seniors. They're safer. They'll keep giving you money and dividends. But the juniors is where the outsized potential rests if you choose correctly. Here you see the ratio of spot gold to the XAU, the gold index. Look how far apart it is. It's going to revert to the mean. It's going to go back up into that red box that you see above there. And not only that, it's going to overshoot. It may go up like you saw in 93, but it's going to change the relationship of gold and silver to the miners. And if you're on board that trend, you're going to be very, very happy if you play it correctly. Here you see again, look at this opportunity, the greatest since the 1940s. This is not going to come again. You don't want to miss it. You don't want to blow yourself out. You want to stay calm and stay in the game until the last part of the innings. And one of the things that David Morgan does in his Morgan Report letter, he is excellent at picking tops, and he will admit it. I'm not so good at picking bottoms, but I'm very good at picking tops. In the 2011 top, which had the all-time high from 2011 to 2012 for gold of 1923, David Morgan called that top publicly and to his subscribers within 1 day. And I believe he's going to do it again, very close. It might not be one day, but it'll be close enough that his subscribers will be able to decide to get out with most of their earnings. And then in our book, we actually have a way to stay in the market with some of your earnings. And if the market goes up much farther than even we thought, you're still in play, but you're not risking most of your earnings. And you won't be like the majority of the people who will follow that market down when it inevitably ends in a crash. Look how long it's been since that last market took place, that massive red mark on the right-hand side. The bigger the base, the greater the upside case. This is what old timers have said in their trading for 100 years. It's what Jesse Livermore said, the world's greatest investor in the 1920s. This is going to be a powerful, enduring, massive bull market. It's going to call all the top callers wrong. It already has. A lot of the best minds have been saying, get out of stocks for the last month. Sell the miners, they're overbought. Sell the metal, it's overbought. They said this at 1850 gold. They said it at 2150 silver. And now gold is 2080 right now. And silver is $29. And some of those people are still waiting for a correction to get back in. Now there is going to be a correction. Maybe it'll correct from 32 to 26. Maybe it'll go back to 21. But the point is, if you've been out of this market and you sold your core, you've been watching. You've been a spectator rather than a speculator. That's why you have to balance being in with being out. $26 to $49 silver is what I call volcanic tremors. We're already at 29. When silver breaks above 50, we're going to see a pyroclastic eruption. We get a few closes above 50, it'll be at 65 or 70 in a heartbeat, on its way up to 3 digits. This is a massive opportunity, and it's going to call out the animal spirits across the board where people try to buy silver and silver mining companies regardless of the price. Here we are. Maren Katusa did this, and others have done the same thing. Look at where we are in relationship to past bull runs. Imagine what it's going to look like when we take any of those other 3 charts that you see there, which will build out over the next period of time, whether it's 18 months, 36 months, 5 or 6 years. It's going to happen. It's going to be something bigger than most of us can imagine right now. Here's a big mistake I made. One of our analysts, Chris Marchese, who used to be with the Morgan Report and is now with GoldSeek and SilverSeek, writing excellent material and information over there, he found Kirkland Lake for our readers at $5 a share, $10 below what you see here. I got in around, I don't know, 16. That thing ran up to 22 and it started dropping a little. And I thought, you know, let's hang on a little longer. It got up to 25. I decided to take a nice profit. I sold all my Kirkland Lake, and I watched that go up to $55 a share for the next 18 months, and I watched it. So that's what happens when you sell all of a core position and think that you're smarter than the market. I've come to understand completely now that I'm not smarter than market, and I never sell all of my core unless there's a compelling reason to do so, unless that company is no longer performing the way that I think it should in terms of risk reward. But I think about it carefully before I get out so that I can try to avoid another Kirkland Lake. Here's a palladium chart. Now, I think this is what's going to happen to the silver market. Don't pay so much attention to what the price is and relate it to silver. But here you had a 20-year market that in 2001 topped out. And this is where Ford Motor Company sold their palladium at a couple $1 billion loss. It went down into a bear market for a number of years and struggled on up. And finally, in about 2018, it made a new all-time high. And I was participating when this happened, but I thought, you know what? This is a 20-year high. It's not gonna, this is it. This is the end of the bull market. And instead of selling a little bit, I sold what I had out in my shares. And I felt like a hero when it went down to about 900. But then look what it did. It moved on up and it went above 1100. And I watched it go to $2,800 an ounce and stay there for a couple of years. This is what happens when you think You found the top and you sell all the way out. That's okay. If you're a sandwich trader, that's not wrong. You can make good money, but it's really hard to watch it triple after you sold out thinking you sold the top. There are strategies we have to do this. And I think this is what's going to happen to silver. At some point, I don't know where it is. It might be $90. It might be $150. It's going to make a top. It's going to have a violent reaction and go into a sideways movement for a period of time. It's going to shake off just about everybody that thinks, you know what, this is it. All the experts are going to say it's going to drop. They're going to get out. It's going to creep up above where it was, and it's going to go up by another 100, 200% from wherever that was. That's what you have to be careful not to miss out on. David Morgan has studied this profusely, and he's shown that as much as 90% of the profit potential can come and does come from the last 10% of the time of the market. And this is further supported with a beautiful quote that came out this year from Incrementum. I'm going to read it. It's so powerful, and I want you to remember it. One can see that every gold, and you can place silver in this too, bull market always ended with a parabolic upward trend that lasted 9 months on average and at least doubled the price, presenting us with a potential once-in-a-lifetime opportunity. Do not forget this quote. Do not keep all of your money in the market, but enable yourself to be in there in some fashion that you're comfortable with, so that in case you're wrong and it doubles after you thought the top was in, you get to participate, not just watch. The Pareto principle is one of the most powerful things you can use in your life for all sorts of things. 80% of the effort that comes back to you on a job, whether it's building a wall on a house, whether it's paddling 300 miles, whatever that is, 20% of the effort that you make will give you 80% of the results. And I never thought so much about this in terms of investing in mining stocks until I listened to Peter Groskopf give an interview a couple months ago. And all of a sudden, when I thought about what he said, it was so powerful. It changed the way I've been thinking in a matter of a few days, and it has absolutely supercharged my earnings since then. He said when others are selling, the top investors are buying, and the reverse. Now we know this first one. That's not anything new to anybody. We struggle with that all the time. But then he said this: these people that are very successful know how to keep their winners, usually via the 80-20% rule. 20% of your investments will make 80% of your returns, and the rest will probably subtract from that. So I went in and looked at my 30 stocks, and by golly, 6 of them were ones that I identified as those 20%ers. And the others, they're doing pretty good. They're mostly in the green. I have one dog that I think is going to be a 20%er, but it isn't hunting yet. But when it does, I think it's going to do well. So I'm going to hold on to the faith. And I looked at the others, and they're doing okay, but they're not doing like the 6. And I found out for me, I didn't have enough of the 6. I wanted to really overweight. If those are going to be the ones that do the best, I want to have a big chunk. So in some of them, I doubled my position. In 2 of them, I was up 40% in the next week after having done that as it started to move upward. This is very powerful. Please think about it. Apply it to the way that it fits you. There's a massive change taking place. And I'm going to tell you right out of the box, we have followed this company for 4 years intimately. We were there when it got started. It is not doing what it should in the market. We don't know why, except that I think people don't believe it's possible. And also not many people know about it. But this stock is kind of sitting there quietly. And I believe, and David Morgan believes, when and if the business model is correctly executed, it could give returns that are almost unbelievable, because it will change the face of e-waste and the mining industry beyond anything that's happened in the last 40 or 50 years. By definition, because it hasn't moved and because it hasn't been fully proven in the market, it's high risk. But by definition, because it hasn't moved, It's also low risk. It is an asymmetric trade. If and when this business model is successfully executed, and this can happen over a period of years and decades to fully, realize the value proposition, this stock could become a legacy investment. It could create generational wealth. You have to be willing to risk it. You may need to risk 100%. We don't think it's going to go to zero, but nobody knows. But if it works, it could be really, really massive. But it's been frustrating so far. We keep coming back and looking at it, and the figures always look the same. It looks like a winner. Nobody's been able to handle e-waste until this company came along. 80% of e-waste has been buried in the earth or burned up to get the metals out of it, creating some of the most toxic places in the world. This company grinds up computer boards and electronic waste and gets gold, silver, and other metals and tin out, and does it without any tiniest of footprints, and ends up with an inert white compound that goes into concrete to make it stronger. So this has never been tackled before. The build on this, you can see they grind it into what are called fractions, and a certain amount of it goes through a dry cycle, and a certain amount through a wet cycle using EnviroCircuit, which is it's approved by the FDA. You could drink it. It's hard to believe, I know, but they use electrowinning and other processes to get the metal out. The metal that in the wet cycle that is in a concentrate is sent to Glencore, among others, and smelted out into metal, which is reused. The plan is to build 6 companies over 6 years, 6 operating sites. There's one in Surrey, BC that's operating now. Here's the value proposition is the e-waste. By the way, every minute you're listening to me, 100 tons of e-waste is generated globally, and 80% of that's going into the ground. The other 20% is being burned to get the metal until this company came along. The second value proposition is going to be to take gold, silver, and uranium and other metals out of the ground via extraction in a way that does not disrupt the ground, and it only takes the metal and leaves everything out. There's no open pits, no ponds, no smelters, no cyanide. This is being developed as we speak. Several of the world's largest gold mining companies have NDAs looking at this product and seeing that it works, and it's been proven in many different cases that it does. So when and if this business model executes itself in the way that it needs to so that the market believes it and starts getting more eyes on it, it could be really something to behold. These are the benefits to the mining sector. This is something that's too good not to believe in our view. EnviroLeach technology is the gold standard in metals abstraction. I wrote this by invitation. I was not paid to write it. I was talking about EnviroLeach and Group 11, which is a skunk works type of operation that is being put together. And the partners in that are Golden Predator, Encore Energy, which is a uranium company, exploration company that's headed up by Bill Sheriff, one of the top lights in the uranium space, and EnviroLeach. These 3 companies it'll be a privately operated company, research company, kind of like the skunk works in World War II that created this SR-71 Blackbird, creating new opportunities for using reagents in the leaching of uranium, gold, silver, and more. Here you have, look at all these people that are unbanked around the world that have a mobile phone. They know all about the mobile phone. They don't need to be taught about blockchain technology. Blockchain technology on a distributed ledger is and is going to, and it will continue to change the world. You need to know about it. You need to pay attention. At some point, you will participate in it. The people that are participating now are going to start creating opportunities for life-changing wealth as silver, gold, and other entities are placed on the blockchain in an immutable record to be kept for those transactions. One of those which we follow, there are 75 or 80 different attempts that we know of trying to create a digitally backed metal on the blockchain, a coin and or a token. Some of these are just basically glorified storage opportunities. Others are ones that are trying to do something kind of half-hearted like what the load project is doing. Some of them have already been blown out of the water. Most of them have trouble because they can't meet the local regulations where we are. The load project, of which David Morgan and I are ambassadors, we talk about it, and it's not like a company with a management team or anything like this. There are people that do a lot of the heavy lifting, but there's been an enormous amount of time and effort and money spent on getting regulations to accord with in North America and in Europe. There was a very large legacy investor which just put in a number of million euros into this project. There are people contributing from 51 different countries into the load cryptographic token and the AGX coin and now the AU coin. So they're being these coins are being backed by gold and physical silver vaulted in 7 or 8 different secure vaults around the world. This is something to take a look at. You can find out information about it at load.one. You can see some of the 51 countries that people have vaulted from as individuals. It's continuing as we speak. This is a monetary system. It isn't just how to store your gold and silver. It's meant to be a system where people can buy and sell things around the world digitally using gold and silver, and also storing gold and silver for investment and for speculation. It's digital, it's private, it's high speed, it's peer-to-peer, silver and gold money for everyone. The unbanked millions around the world, in India, in Indonesia, in Mexico, in South America, will have access to this on their smartphone. They won't need a bank. It'll be private. It'll be a permissionless network. It has the potential to change the world of money. Nothing is ever guaranteed, but so far so good, and they look like the strongest horse in the race in this category. Bitcoin is not an enemy of gold. It's not a competitor. It's not going to replace gold. Gold's not going to replace Bitcoin. But Bitcoin is not something that's going to go away. The doubting Thomases are falling by the wayside. Bitcoin today may hit 12,000. It's just below it as I'm presenting this. It's been as high as 20,000, as low as 3,000. This is something to pay attention to. It's the gold standard in digital coins. There are several thousand coins. Bitcoin, Ethereum, and a few others are the lead horses in this. And Bitcoin is not going to go away. It's never been hacked. A lot of people still find difficulty getting started on it if they don't have, say, a Coinbase account or something. This is an opportunity. If you don't want to hold Bitcoin or take a chance on losing it on a wallet, you can buy the GBTC, which is an ETF traded on the OTC during normal stock market hours. And they buy Bitcoin as people buy more shares. And I hold this myself as a speculative vehicle. And this will profit a great deal if and when Bitcoin continues this move on up to 14, 16,000. There are calls that by the end of this year, it may reach an all-time high above 20,000, perhaps 25,000 or higher. Some of the statistics for the next few years are almost unbelievable, but this is a new paradigm, and it's as more and more people come to understand it, and as some of the world's largest brokerage houses are now being given to hold it as a custodian, which is a massive legal improvement for them. They could never do this before. You're going to see Bitcoin, of which there have never been more than 23 million, of which 3 million have probably been lost. It's going to be trading in a millionth of a Bitcoin. It's called a Satoshi. You're going to see millions of people trading Bitcoin. They're going to be holding fractions of a Bitcoin. If all the millionaires in the world wanted 1 Bitcoin, that wouldn't be enough. They could only have half of a Bitcoin. That's how rare these things are. They can't be printed indefinitely, like what David Morgan calls paper promises, the money in your pocket that loses 5 cents on the dollar every year. And that's not if you're in Lebanon or Argentina or someplace else. It loses 50% or 500% a year. Here's the breakout of the GBTC. It only trades during market hours, not on extended hours. Bitcoin trades 24 hours a day, 7 days a week. So there can be big moves when you can't get in or out because this market is closed. That's the primary disadvantage. It has great liquidity. It'll be like 1 point bid ask. Other than that, other than not can't trade it 24/7, and maybe it'll go to a New York exchange at some point. But until then, that's your biggest negative in my view. So we have ripples to shock waves. This is what's happening the first time in history, a trifecta of a theme operated upon simultaneously around the world with a shorter time frame. This could be an 18-month bull run in the metals. We don't know. It could go 3 years. It could go 5 years. It could go 10. We have to watch and see. Cell phone enables blockchain metals trading as honest money, and this is going to be a new demand factor for physical gold and silver that was unanticipated by the mining sector. That's the third tailwind leading to a moonshot in the mining shares that produce the gold and silver. Not to mention the price of gold and silver, not to mention the demand for the digital coins that back it successfully. You need to be informed about the blockchain. Keep reading about it. Read George Gilder's book. It's a little bit deep sometimes, but he's called the shots a number of times on things 10 years before they happen. I don't think he's going to be wrong this time. Hold on to your psychological capital. Mining shares catch fire late in the cycle. After the public runs to physical, they'll go to mining shares. David Morgan said this. This is exactly what's happening. The blockchain is going to change everything in our life. Keep learning about it. Here's some carbon replacement deposit, smelter-free copper that's been discovered in Ecuador. You can figure out who is doing this. I know the individual personally. I consider him a colleague and a friend. He made the largest gold discovery of the last 25 years in 2006 in Ecuador. He's doing it now with this copper deposit. It's so pure, it doesn't need to be taken to a smelter. It can be refined in situ using low impact environmental methods. He's also on the cusp, I believe, of discovering the 2 lost cities in Ecuador, that gold that the Spanish conquistadors said in the 1500s were the richest mines in the Spanish Empire. You can imagine what might happen to his share price if he's able to pull this off. David Morgan has a free weekly letter. He has a yearly letter, which is very well subscribed to by individuals, by high net worth individuals, by hedge funds that read his letter. So you can get either one of those opportunities. An awful lot of people that read his weekly, listen to his weekly presentation, end up signing up for the Morgan Report. It's well worth your time. He's profiled more mines, more exploration companies that have gone to producing mines than anyone we know of out there. You can hook on to his information here with the getting onto your mobile phone, and you can find him at themorganreport.com. You can write to support at the Morgan Report to get more information. So the technical tools here, I have some more I can go into, but I think I'm running short of time. I want to leave time for people to ask questions, and I'll answer as many as I can. I love to do the Q&As. Sometimes it's text, sometimes on talking, whatever. But however this venue works, I'll answer your questions. So thank you for your time. I love doing these things. I'm excited about this. We are in the midst of a once in a lifetime opportunity in these markets because of the debt that countries are running up around the world and the physical debt that people have as individuals. This is going to be a game changer that no one can predict just where this is going to end. But those people that choose to accept the risk and play it right are going to have enough wealth to transfer to another generation after taxes. Take care, and thank you so very much.